Uh, Apart from that, like every year we meet with around 1200 plus fintech founders. After meeting with those 1200 fintech founders, we select certain startups which we further incubate and accelerate, and then we invest. From an investment point of view, very recently we have set up a fund, which is a 100 crore funds, wherein the idea is to invest into the early stage fintech. We have done so far 16 odd investments. Some of the companies which we are having in our portfolio, companies like M2P, One Card, Discovery, Fi Commerce, and few others. But if I just talk about the fundamentals, right, we are not just venture investors. This is like something which we have developed over the period of time, what we have seen at the grassroots level. And in today's date, we operate much more like a venture studio, right? This is like who we are. We operate much more like a venture operators. This, whatever we do, around multiple, the banks and financial institutions are there who support our initiative. They are mostly our ecosystem partners, who basically come to us so they can get access of innovation. They can find some interesting fintech startups as well, with whom they can start collaborate and work together. Right. We have started building city-wise ecosystem almost a year back. We have started with the Pune, then Chennai, then Mumbai, Bangalore, Delhi, and NCR. In today's date, in all of those city chapters, we have 1500 plus fintech founders, plus all the senior bankers of that particular city, plus all the venture partner institutions. We have launched Pune almost 6 months back, wherein Cosmos, apart from that, One Card and multiple other such players from that local ecosystem came forward, and then they shared their insight about what's happening in the ecosystem and how they can help some small fintech founders. Likewise, we did in Chennai, and this is the third launch we are doing. We will be also launching few chapters in Mumbai and Bangalore in the next 2 months' time. Just to set up the context of this particular program, we have actually constructed this entire program in a way like how we can actually capture some of the industry developments which are evolving on the financial services side, right? So we today, as a next step, we will be having 4 panel discussion of 45 minutes each. In the first panel discussion, we will be talking about lending, and we will be discussing multiple aspects which are revolving around it. Mostly from a lot of people I've met since this event has started. Everybody was asking कि यार RBI कर क्या रहा है? So we will discuss about all of those cases. And then we will be discussing about data-driven decision powers. This is like something which is a panel discussion. It revolves around the data and how the data can actually enable the businesses. The third panel discussion will be centered around digital payments, right? And the last panel discussion will be around data and API, like how enabling distribution of the financial products. So these will be the 4 topics we will be discussing. And at the last, very, very thank you to all our supporters, and very, very thank you to all of you who have joined this event. And special thanks to DMI and our startup partners FinView, Data Sutram, Falcon, Tartan, Castler, and Buffingcage. Thank you.
Thank you, Pankaj, for setting the context and laying out the agenda for the day. We will now begin with our first panel discussion, that is on digital lending. Are the wings of billion-dollar opportunity getting clipped? Digital lending as a segment, as promising as it can be, is yet to show some large-scale disruption. While some models have worked so far, some have failed, and some models have been in regulatory crosshairs. The discussion in this panel would be about strengthening the framework of digital lending. What could be the way forward for the digital lenders to build their business models, and much more. I would now like to invite our esteemed panelist, Mr. Siddharth Mahanot, co-founder of Indify, Mr. Rajat Gandhi, founder Faisen.com, Mr. Ajay Sahasrabudhe, Chief Revenue Officer at Hero FinCorp, Mr. Vasant Sridhar, co-founder and Chief Strategy Officer at Off Business, and a moderator for this panel, Mr. Manish Bhatia, co-founder of FinU. Over to you, Manish. Hello.
सॉरी, मैं खाली 1 मिनट, वैसे मैं इंटरेस्टेड नहीं था यहाँ आने के लिए स्टेज पे, बट मैंने कहा 1 मिनट के लिए आता हूँ, सो दैट बस थोड़ी सी एनर्जी बढ़ाओ यार। मतलब दिल्ली शहर की सबसे बड़ी गैदरिंग है, इसमें इस समय पर 100 से ज़्यादा फाउंडर बैठे हुए हैं, तो थोड़ा एनर्जी लेवल बढ़ाएं वहाँ से। आप में और हम में ही तो आग है, बाकी तो सब मुर्दा हैं, तो आग निकालें। बहुत बहुत स्वागत है आपका।
Yeah, hi. Am I audible? Okay, great. Yeah, I think it's good to see a good turnout here. So I just go to the topic itself directly. We're talking about digital lending. I think we all know what's happening on the ground, what's happening in the last few months. In fact, changes in terms of regulations, new guidelines coming up. So we thought, that's a topic that we want to discuss today. And get views from each of our panelists here, and what's the way forward, going forward, post this the changes that have come in. So just going down to the theme of it, like to take up with Ajay sir first with you, that with all the regulations coming up, the new digital lending guidelines, and there was this PPI as well change, and then the co-branding of cards. So how do you see it? What's the impact of it on the ground? What's the approach?
See, one thing is very clear from my belief is that this opportunity is not going to get clean. It may be a little louder. So my belief is very clear. It is not getting clean. It will rather further fuel. It could be a temporary pause to align towards whatever the expectation and the rules RBI wants the innovators and the fintech partners and REs wanted to come together. Expectations are, to be very honest, simpler, but over years of a tough period, we are habitual to what we were doing. I think that may give us some disturbance, but I strongly believe this is not going to be any way clipping the opportunity of a fintech partnership with REs and LSPs in RBI language. There are enough and more innovative ways which we are using to gather the customer. The green shoots are visible, the ticket sizes, particularly from the fintech viewpoint, are increasing. That clearly shows that the model of underwriting is proving right with the other technology and other data aggregators which are helping us to do that. Yes, from an RBI perspective, we need to get aligned, and it will take another, though they have given the timeline till November, I think more or less all the REs and LSPs would be aligned to that. Yes, future is quite bright. I think this will further fuel the growth, which I firmly believe, and wherever my company is working, I think that clearly shows the engagement level has been increased, and there are different products and innovative ways of to be more kosher on the RBI, the guidelines. So I don't see, it may be a little small disruption, but it is going to be go.
So you think it's a temporary disruption that
Yes,
happen,
absolutely.
but in the long run, definitely it's good for the overall
Absolutely,
ecosystem.
absolutely.
So what is your thought, Vasant? I mean, off business is a fintech in one way, but you also have an NBFC arm. So how do you see it impacting your?
Yeah, so I think in the definition across an LSP or an RE or wherever you are, right, I think we come under an RE regulated entity. At the same time, we are also a digital lending platform. So the way we look at this is that this is, I think, much needed for the long-term standpoint, because all this came with a lot of irrational lending that happened a lot more in the B2C side of things. Everyone knows what's happened with the Chinese apps, everyone knows what's happened there, and I think the layer of filter or boundary or discipline that needed to be being put between a service provider, between the guy whose balance sheet was going and ultimately the end consumer, it had to happen. In the spirit of, I think, interest of the end consumer or the borrower, this is very much right, it had to happen. But I think what has happened is, in that entire premise of keeping things tight from the long-term standpoint, at least the guidelines that have come off late have resulted in more ambiguity for different people, especially more on the B2B side. So I reflect B2B lending, and I'll talk a few lines about that. So there are, for example, a standard clause that says that lending should happen from the regulated entity definition into the account of a borrower. While on paper that sounds great and that's typically what you want, the intent is good, you want the borrower to know who's paying the money, you don't want money to go elsewhere, you want to control, and you don't want arbitrage in pricing, etc. But to an institute like us, who are into working capital financing, the USP of lending is to control end use, where we ensure that money goes for consumables, money goes for capex, money goes for material. So technically, our business model is more tight, because we don't transfer money to the borrower, but we actually transfer money to the ecosystem and control the working capital in the supply chain. Now, a motherhood statement saying that don't go into the end user would obviously want us to reach out and get more clarity towards what we do. Yeah. So there is some short-term pain that's coming out of it. I think companies who have been more compliant, companies who have been more on the B2B side, who have adhering more policies have taken the brunt of it. But hopefully with clarifications that come forward, the wings will not be clipped. It's only towards the long-term sustenance of lending in India.
Yeah, I think that's a good thing. So, but Rajat, coming to you, do you have any contrary views to this, or?
Yeah, so I think it's total chaos. That's quite a lot. Yeah, so partly the regulator is to be blamed, partly we are to be blamed ourselves. Okay, so I think in the offline call I talked about that. So we have to see a journey. Firstly, nobody knows now what digital lending is, because the way the definition is. The second part which you talked about, so there are some 100 clarifications required in that document, and that document doesn't actually confuses you more than it clarifies anything. Okay. We do not know whom are they trying to regulate. What has happened is that regulated entities like us, who spent a lot of time in terms of getting a regulation for ourselves, like I run a company called FairSend, which is B2B lending, and we wanted to run a proper company in the right way of things, because we were not regulated. We went to them and got the regulation, and now we are seeing every day a new piece of regulation coming for us, because somewhere down the line, some person within the ecosystem thinks regulatory arbitrage is innovation. Okay. So let's first call what the issue is. So just because you can load a PPI license with some credit and you think you become a credit card challenger, everybody knew that you could do it. Okay. Now you're going and crying about it. And look, it was not never an innovation. So if you have to do innovation, let's as an industry also first look inwards. Okay. What are we doing, and why are we getting this regulator on our heads? And when the regulator will come like this, he will come with this kind of a regulation, where I think not only the $1 billion, I think $10 billion dreams are gone, okay, for short term. Now, do you have the patience and the financial strength to weather this storm for next 1 or 2, 3 years till the time the regulator understands what they have done? It's anybody's guess. So I think right now, even the investors, everybody is very careful in terms of digital lending. So this is the right now, I have just stated a fact, what my angst is around this thing, and I'm actually right now a little cynical. This is the first time in 8-9 years I've started the business. I'm feeling that way. And I'm being upfront on it, and anybody who's starting, there are a lot of promoters and there are a lot of founders out here. I think within lending, you'll have to be a little careful. Second thing is, if you're wanting to do innovation, I think don't do it outside the system. We'll grow and then go for the regulation, because they come and just shut you down for all practical. So that's not the approach you can take, that the way the Olas and the Ubers took. Okay, you scale and later, because those are not highly regulated businesses anyways. Okay, whereas these are the businesses where you have one regulator, and it has not only the power, it has the moral power also. Okay, so a lot of regulators are discredited in this country otherwise, but this regulator has all the moral authority. So when they come and regulate, nobody says a word. Neither the government, nor the state governments or any other body. So you have to be very careful when you're trying to push the envelope of innovation, because not only you hurt yourself, the whole ecosystem gets hurt. Yes.
Yeah, but I mean, just taking that further now, I know regulations brings about some pain, but don't you think it's overall good in the long run? Because now at least we have some guidelines. Earlier there was no guidelines, so I just thought maybe if you.
So not doing anything is always good in the long run. So okay, so that right now we are at that stage, because we don't do anything, so we don't make mistakes. Okay, so that's not the answer in my mind.
What are your thoughts?
Yeah, so I'll kind of pick up some thoughts both from Vasant and Rajat. I think, as Vasant rightly said, regulations were definitely needed. There were people in the industry, largely on the B2C side, who were misusing or doing things which were outside of regulation, and that had a clear impact in terms of large segment of customers getting impacted. So regulation was definitely required. However, as Rajat said, regulations have been very, very ambiguous in terms of what are they trying to address. Now, when you look at those regulations, some of those things, I wonder why are they required only on a digital lending company. They should be applicable on everyone. So now there's a lot of clarity, a lot of ambiguity. Who is a digital lender? Does it apply to me? Does it not apply to me? Ideally, some of those regulations should be applying to everyone irrespective of if the lender is physical versus digital versus digital, right? And then this other thing between a B2B and a B2C. Vasant gave you one example, and there's the other thing, like in B2B across the world, now people are talking about cash flow based lending. When you tap the incoming cash flow, then you lend to somebody against that. Now that has gone away. Right? So for example, at IndieFi, we lend to customers, say e-commerce merchants against their sales cash flows. Now I can't tap those cash flows. Now, when you go and talk to regulators, they say, oh no, that was not the intent. The intent was the money coming through an LSP in between. But the way the regulation has been worded, they've cut down a lot of other things. But my belief is this will be a temporary hiccup. There will be clarification which will come in. The regulator, at least from what I've seen, will be open on discussion. We've gone and represented, they've heard us out. So I'm sure as they will understand that there was not only one business model which was operating, there were multiple business models which were operating. And there's been some collateral damage which will get corrected hopefully over the course of time.
Yeah. So I think there's another point which was there as part of regulation is in terms of the usage of data and keeping in mind the consumer protection. Basically telling how data should be used, what data needs to be used. Also, I mean, taking that forward, we've got now the account aggregator ecosystem, which is kind of shaping up pretty well. And as I think, as you said, the cash flow problem, probably you can leverage that to actually solve one of those problems. So I thought, if there's anything you want to add on to that, how
I think most of the guidance around data are fairly straightforward, and they were very much required. So I think a consumer needs to know what data is being collected and why that data is being collected, right? So, at least in our segment B2B, we don't do SMS scraping or taking personal data from the mobile phones of people. So we are not that impacted, but at least if you ask me as an outsider, I think those regulations were definitely required around data protection.
So what is the, coming to Vasant, what is your thought with the new A ecosystem? If you all have already adopted it, what is the traction that you're seeing? What is the experience from the customer? I know you all in the B2B segment, but it's slightly, but then, what is the traction overall?
Yeah. So we are obviously in the B2B segment. So today, for very micro ticket B2C lending or on B2C lending, it makes a lot more sense. But I'll tell you where we see genuine value going forward is that today the process of whether, yes, all of us digitally upload documents, yes, true. But the truth is even then there is a digitization process that goes on top. Now you don't want ambiguity. There is obviously a chance of, there is some percentage at an overall level when it comes to fraud, when it comes to the end user submitting data. So for us, we look at it more in terms of not in terms of lending opportunities, but we look at it more in terms of reducing fraud that comes in. Fraud that comes because now you have real-time access to data, nothing can be manually triggered. And even from the consumer standpoint, it makes fair sense because like how you had SMS scraping, you also had screen scraping, like takes shots and share that. That used to be a major challenge. Unfortunately, that was a known process in the industry around. So is it today maybe a part, so if you sort of, solve lending into three buckets, right? Those who are already funded, those who are underbanked, which is what we work on, they're banked, but they're underbanked. And then the third is unbanked, who have no banking access. I think the third layer where it is about people who are unbanked, where even a single data point, say it is GST, whether it's now SEBI has joined it, whether it's just mutual fund account access or one account access, for them leveraging AA would result in lending to them, which they were more on the unbanked segment of the population. But to us who are more in the underbanked, because we believe that in India almost everyone's underbanked, right? So in our segment of population, we'd see more of it as a compliance point. Like our compliance officer there, they should be very happy that this is happening. But the truth is we don't see too much volume or business, at least in today's context, coming out of this.
Yeah, so I think we're in the early stages of that. So I mean, Ajay sir, if you have any thoughts?
No, and I completely agree what Vasant is saying. In our case, we are from 15,000 to 15 crore types of lending products. Obviously, the AA will definitely add tremendous value in terms of controlling fraud. That is one of the big advantage which will come. More so, if all participative bank comes on very fast, that will cover the large customer database which is coming. Consent-based data collection is always good, which will give everyone an good sleep and without having any unwarranted fear in mind. So that is one great thing. Apart from that, if insurance and mutual MF data is also coming, the cross-sell and upsell data, which can really play a big role, which today, basis on a hypothesis we are working, but this will be a real data available to us to do that. So I am clearly saying, but the pace at which we are progressing, I think banks also need to look at it more seriously and take their steps, because I have been hearing that a lot of nationalized banks are still yet to, there are only 2 banks who are onboarded, but they are still showing only savings account, not yet started the current account or CCR and the other account. So I think that comes on. I think this would be a great initiative, a great help for the industry to grow multifold.
Yeah, so I think it's right. I mean, we are in early stages, things are happening on the ground. Myself being closely associated with this. So we are seeing things, lot of things happening on the ground. But, so I mean, Rajat, from a P2P perspective, how do you see leveraging the A for P2P lending and what's the thought?
So, look, I'm a great believer in this model. I think we were the first ones to use integrated Yodlee when it came back in 2015-16. So, incidentally, Dave spoke about when the regulation came around for the A around 2016, and we were engaging with the regulator for our P2P license. So, I've seen the journey of A going through that. But it's quite a slow burn, the way I see it. And I don't foresee the way the other success story which has come from RBI in terms of, especially in payments, the UPI, something like that happening around happening unless there's a black swan event like a demonetization or a COVID which propelled the whole UPI regime to go to the next level. So how will this play out? What are the triggers for the consumer to adopt? One is the ecosystem adopting the data regime around AA, that is the banks and the wealth companies and all that. That itself is a slow adoption. Then the other challenge is that how will the consumers adopt to it? Okay, because they also need to understand there's a learning curve out there. And do they see value in giving out that data? Yes, for taking a loan, yes. I do not know for what other use cases will they start using it, and at what velocity. Look, some people will use some things, but how do I create a full profile of a person? Because we have, as P2P, we will be using both sides of the data, both on wealth side as well as on the lending side. Okay, that is onboarding a borrower. So very few companies will be using like this, or banks would be using it from this prism. So for us, it's a great thing, but the whole issue is around adoption at pace with the regulations and the overall thing which is happening. So right now we are guarded. We started integrating. Let's see what happens.
Yeah, so I think you mentioned will there be a UPI moment or a black swan moment? So do you think like the digital lending guidelines will actually trigger adoption of the
So look, as I said, there are two parts to the ecosystem. One is the adoption by the institutions. Okay, that itself is moving very slowly. The second part is adoption by the end consumer. Okay, because there is a journey around adoption of that also. That he has to understand. He has to register himself first. Then he has to say give a consent to various things, and he has to understand what consents are he giving, right? For how much time? Okay, we will again have those issues, the same issues which have happened with Google Apps and all that. Why will it not happen? Because the consumer behavior is like that. He says next, yes to everything. Right? So it's not that he didn't know that he's giving access to his SMS and camera and his phone records. It's just that he says, "Acha, theek hai, loan chahiye," I keep on pressing next. So how will that be protected in an AA environment? I do not know. That has to be seen. Because after 6 months, he should not come back and say, no, I only gave one time access. And then my business model has a problem. Because if I have built a model around continuous data flow, and that breaks, what do I do? And tomorrow the regulator comes and says, no, this click wrap is not good out here. The way they did it with IRDA, right? So there's a huge law. It's not as easy as UPI. There's a password, there's a this thing, and you go through, right? The money has gone or not come through. So whereas here the learning curve is just not about him learning it. It's
educating the customer.
And even the businesses will go through that education. Let me tell you, there will be people who will misuse this also. And that one person who's misusing will have a huge impact on us.
For GST, when you ask OTP, the so-called good businessman hesitates to share that OTP because in his mind there is an ad going, do not share OTP. So that confusion needs to be cleared out. Then the adoption from the consumer side, we will also enable this.
But I mean, just to take that further, I mean, of course, they are regulated entities. And of course, the digital lending guidelines also talk about consumer protection. So how do you see it, Siddharth?
Yeah, so I think most of the points are covered. So AA definitely very, very useful, solves 3 problems, reduces the cost of processing a loan, reduces frauds, and third, the most important, gives you ongoing data access, which is very important from a risk monitoring perspective. But I think I would take up from Rajat's point that there will be a lot of effort required to create consumer awareness. For example, today, does a consumer know that AA is under RBI approved framework? They will think that a fintech company is asking me that apna aap authorization de do. So unless the industry comes together and says, okay, this is like you have an example of the mutual fund industry, the mutual fund sahi hai, that the entire industry is coming together and promoting that use case. The fact here that it is a completely regulated process. The AA framework is blessed by RBI will have to be advertised a lot more for people to adopt it. Today, when I go in my friend circle, people don't know. People who are not from the finance industry, they don't know what the AA animal is. And if even through those people, somebody comes and says, you give me a banking access, they're not going to give it because at one end you're hearing ads all through the day, don't share your OTP, don't share your credentials. So how do people know that this is a regulated process which will help me and which has enough inbuilt protection? So that is where the industry will have to come together to make sure that that awareness is created.
So I think, to sum that, awareness has to be created additionally on top of getting trust from the consumer.
Yeah, I am actually less worried about the institutions participating. We've seen it everywhere, right?
Yeah.
Once the regulator comes and says this is mandatory, they will have to all do it. It happened with the credit bureaus. CIBIL was the only one for maybe 10 years, and the regulator said you have to submit to all. Within 4 years, it happened. So here also, I think the institution side will get taken care of much easier, in a much easier way, because the regulatory push will come there that it is mandatory for you to participate. But the consumer awareness is where a lot of effort would be required.
So what would you think, obviously, can accelerate further on the... I know we've got...
The industry needs to come together and create awareness.
Yeah. Or is it more information should be available on the ecosystem? Vasant, what do you think? Like,
I mean, right now the data sets that are available compared to what should be available, maybe to build a complete digital lending journey?
So the problem is today again data sets available are in pockets. Uh, for a lot of lending, it's not only about data sets, which is true, and I'm talking from again a pure B2B standpoint for in terms of for us how we can leverage it for more value. Yes, there is a lot of data sets, consumer consented data and authentic data coming in, but a large part of the problem, or because ultimately the data can't be stored.
Yeah.
And a lot of people are also building other entities which will mine or work or process on the data. Yes, data is the gold, data is great, that's true. But then I think there is also an element of, putting all of that together so that that can ultimately translate to decision making. And I think there is some time to go for the ecosystem to evolve and mature, especially when you go beyond micro ticket size retail sort of thing.
Okay. So I think, coming to, we've got digital lending guideline, we've got the infrastructure coming in. So the state seems to be set, right? But what is in it for the fintechs now? How do they move forward in this? What is your thoughts? What is the kind of approach that we need to take? Lisa.
From RE side, I will definitely want a fintech to support the adoption. Obviously, if the value-added service is coming along with A, is most welcome, and I think that's the play which I see. Getting the raw data from A, but if someone is building something, some intelligence on it, will definitely enable REs to utilize it more effectively, and customer experience will be much better. From regulated entity viewpoint, that adoption to this has to be more aggressive. Obviously, there has to be to and fro process with the consumer end from the FIPs and REs. So that communication and that promotion needs to be more aggressively done, because it's very clear that if this happens, the customer experience is going to be the best, because today he has to give me a 60-70 pages of bank statement, or he has to give me an access, etc., etc. That will go away. And for that, I think as all three parties needs to put together and promote this more aggressively, I think the adoption will become more easy for all of us.
So coming back to our main topic here. So what is in it for the fintechs now? How do they approach? With the changes in guidelines, there are restrictions, of course, in terms of what they cannot do. But on the other hand, the regulators also set up a fintech department separately, right? So what is your thought, Rajat, how fintechs should start thinking? Are there new business models they can emerge out of this? Or
so my understanding is that as fintech or whatever, firstly every lending company will become a fintech, or vice versa, or become a
do you think the vice versa will happen faster than?
Yeah, so everybody has to become a regulated entity as well a fintech. Okay, so that difference will go away. The other aspect is that I think we will have to choose our battles and our business cases much more carefully. I don't think the present model of collaboration will last long, personally, if you ask me. It's just an interim period where the banks are feeling and the big REs are thinking that, oh, these fintechs cannot do without us, and they also think that we have to collaborate with them, unless they are an infrastructure business, like payments or AA and all that. That's a different thing. I'm talking about lending per se. Within lending, I think people will have to choose their own businesses and not necessarily be in a collaboration or dependent on a master bank or a stroke carry. Then I think you can build a sustainable business model. So you have to create your own revenue streams, own customers, and who live with you, and you service those customers end to end. Not necessarily that you originate a customer and give it to the bank. I don't think that will last long. Either the bank will take away those customers or you will die. That's not going to happen. So one thing, the silver lining in the digital lending is that with the regulation is that now I think the most startups will have to look for their own business models with their own sticky solutions, where the end customer is residing with you. okay, wherein you are solving his problem and servicing him. So I think that's something which will happen in the going forward. And if we all solve for that, I think there will be a much bigger ecosystem and a much more sustainable ecosystem which will be created, where you're creating value for the next billion people in the country. Because right now what is happening is everybody is addressing that same 20, 30 million or 200 million people in the country. We all going and giving the loan to the same person where the bank is also already reached. It's just that bank is giving 100 rupees loan and the rest of the fintechs are ready to give him 200 rupees. Okay, so that's the reality which is happening. But we have to go beyond those 100 people to the next 100 and the next 200 people. I think that's where the business models will come and where you will own your customers. And that is the big opportunity in my mind which is coming up.
So anything you want to add, Siddharth, to that? Yes, so I have a slightly different view here from Rajat. I think the partnership model will continue. Now, obviously, fintechs will have to keep innovating, and that innovation cannot be around regulatory arbitrage. That innovation has to be real innovation around credit underwriting, around customer experience, around processes. And I think the partnership model is a real model because both sides play on their benefits, right? On their strengths. Today, for example, I see no reason why today, if you see in the market, most of the fintechs are collaborating with private sector banks or larger NBFCs. The real benefit for a company like us is to collaborate with public sector banks because there I get the benefit of the low cost of capital and they get the benefit of my process innovation. So my personal view is that this symbiotic relationship will continue. However, the ideas around regulatory arbitrage will have to get done away with.
What's the thoughts,
So let's take away the cost of capital because I think that's a function of vintage, history and balance sheet strength, right? So ultimately, if you're looking at finally lending, apart from cost of capital, there are two key metrics that matter. One is your OPEX and one is your credit cost, right? Now, definitely believe that there is synergy between regulated entities and technology providers so that the combination, which is your OPEX as well as your credit cost, can be low. Now, what does that mean? That means that today, if you look at Oxy's or off business, anywhere in terms of sourcing, credit, understanding risk in the manufacturing or infrastructure sector, we believe that we are best in the industry. But today, if we want to lend to, say, D2C brands or we want to lend to e-commerce, we definitely believe that neither the OPEX nor our understanding of risk in the sector, which again boils down to credit cost, might not be as good as someone who's more penetrated into that sector. Hence, we would definitely want to partner with someone who can solve for the OPEX and credit and understanding of that sector so that the complementary skill set results in overall us having more value in the supply chain. So I genuinely believe that B2B or all these industries end up being vertical supply chains. So when there has to be technology players who start viewing a vertical stack and start, as Rajat said, owning the customer, understanding the supply chain, finding their innovative model to keep their OPEX low. If they can actually build a unique go-to-market with understanding in a sector, there is great synergy that can be built by working with an NBFC or a regulated entity and leveraging your niche vertical sourcing and credit assessment strength. But if you are coming and saying that, no, I am going to give 100% FLTG and lend to any sector without my understanding or nuance of that, it's meant to fail, right? So I think technology providers should also treat it with the rigor and as though it's their balance sheet and the way they view a supply chain like a regulated entity. And if that spirit goes forwards, I think there's an infinite market for both entities together to work with.
Yeah, that's a good thought. What about you, Ajay? I mean, Hero FinCorp works with a lot of fintechs. And how do you see this? What is the approach that they can take? Do you see relationships?
See, in terms of, and I'm just taking a clue from what Rajat was saying, owning a customer. Fintech, if they are providing a services and they can innovate, I'm pretty sure banks and NBFC will definitely use them to underwrite because of their expertise, because of their innovative way of onboarding customer. But if Fintech continues to own customers with them, then what Rajat is saying is going to happen. The same customer will get repeated. I will do a top-up after 9 months, 6 months. The transfership of that customer will not go to the banks or REs or NBFCs. And hence, the growth which we are expecting will get limited. So, business model-wise, if the fintechs are giving that support. And it is evident that very few NBFCs or banks today are having their own setup to use these innovative and disruptive models to barring few. So there is a large ecosystem which is still untapped. And if the fintech can really use this and provide those kind of services, people will definitely adopt it, knowing that this customer will be there and I will use this technology. So business model, fee, revenue model can be worked around that.
Yeah, so I think that is an interesting take on the topic. So I think key takeaways would be that while there might be a short-term disruption in terms of operating, but I think the longer-term view is definitely positive, and there are areas of innovation, leveraging public infrastructure, financial infrastructure. So I think fintechs definitely have some thought to think about what kind of business model they can come up with. So I think thanks for all of your time. I think it was a good discussion.
यहाँ जो जनता है उसके कुछ सवाल थे आप लोगों से, if you are okay with that. So थोड़ा सा जनता के सवाल ले लेते, जनार्दन का भी सवाल है तो जनार्दन का ले लेते हैं, फिर जनता पे आते हैं.
Thank you. So my question is, I think totally aligned that all of these new regulations are great for the long term. Now, in the short run, what's the approach? Because some of things are probably might be okay in spirit, right? As we said that you're not paying to the borrower, but actually paying to somebody else, but it helps. Or not collecting from the borrower, but it helps. In letter, they are not allowed now, whereas in spirit they actually helped the cause. So till those clarifications come, what's the approach?
The approach is very clear. The regulation very clearly says that post 2nd September you cannot do those things. So you will have to temporarily pause those. However, as an industry, people have made representations to the regulator. Hopefully, at least our sense is that on some of these things, maybe if not a month, within a couple of months, we should get clarification and it may come back in some form or shape, because there is clearly merit in terms of what the demand is. But as the position stands today, you will have to stop those things because the directions are very clear that any new customer post 2nd September, you cannot practice some of those things which are not allowed.
I think he's being a little optimistic. Nothing happens before 6 months in RBI. Okay, so by the time we implement it is 1 year. So we go back, rewrite our codes back to the normal one. So that's what we've all done.
एक चीज़ जो शायद possibly I will share आज से आज क्या है, आज शुक्रवार है. So last Saturday night at 9:30 I got a call from a CGM at RBI asking कि यार हमने जो भसुड़ी फैलाई है अभी उसको लेकर के क्या है, मतलब what is the feedback and this, मतलब obviously I cannot share who I had a chat with, and we had a almost 1 hour conversation wherein, because so I represent this entity, the Fintech Meetup, so because we are neutral set of people, I could simply vomit to him that this is what you are doing potentially has these kind of ramifications from a market point of view. As a result of that, what we realized is that RBI did some closed group consultations in some of which some of the people who are on dais were part of that. These consultations were held in Chennai, in Delhi, in Bangalore, in Hyderabad, in Bombay, in Pune, and multiple other places. As a result of all of this, on 19th of October, there is another closed group of conversation which is happening with around 60 odd people to seek further representation of the industry in terms of what can be addressed, what cannot be, and so on and so forth. At this point of time, I leave this with the point that the CGM at RBI said कि यार मेरा लड़का जो है IIT खड़गपुर में पढ़ रहा है and वो मुझे बोलता है कि क्या यार पापा आपको कुछ नहीं आता. तो मैंने कहा आप तो लड़का है, आप तो लड़का ही बोल सकते हैं. So, but to give you a crux of this, that yes, regulator is having multiple conversations, and as Rajat fairly said कि 6 महीने से पहले बिल्कुल नहीं होगा, और 6 महीने में कुछ हो जाए तो ऊपर वाले की मेहर है, साल भर लगेगा.
Hi, good evening all. My name is PR. I present Extra Tech. We are a B2B supply chain financing startup. My question to the panel and to everybody around is this, that what is the role of SRO? And we are a very nascent industry and we have 3 SROs. And I am a little confused as to how would they engage in clearing up a lot of air which is there in the market, and a lot of stuff that you guys have been talking about around customer education, which is actually the responsibility of the industry, and industry is represented anywhere in the world by the SRO. So what is your viewpoint in terms of the existence of the SRO in our industry, and given the fact that there are de facto players also coming up, and you've seen an example of how effective a de facto player can be. So what's going to be happening there? Do we see some kind of organization in the SRO scheme of things?
There is a talk about SRO, part of that.
Currently there's no SRO.
There is no SRO. The regulations try and they're saying that we should have an SRO, but unless that SRO is recognized by RBI, it has no meaning. It doesn't have any kind of teeth. Forget about any kind of teeth. It even doesn't have a moral authority. So I think that's some time away. Firstly, we have to define what is digital lending. I think there the definition itself has to be, and who are digital lenders now. So I think before that, I think mutual fund industry has a SRO where it's very clear what microfinance is. Yeah. So as a services, whereas in digital lending, even microfinance is part of the digital lending at some level. So I think that there's a whole ambiguity right now. It will take 1 or 2 years, and then we can expect some SRO to come in.
Anyone else? This also reflects कि हम लोग events वाले नहीं हैं, तो हमारी expertise in managing mics is bad.
Very quick, query, and in fact, I'm sure you'll be much better placed to size it up. So what has happened is, largely about the misuse of, say, the uncalled for platforms, external entities which has been disbursed, and hence, there's been, a lot of, chaos or rather negative policies that happen in the market. Largely the BNPL stuff that has happened is largely around the area, and that's why we're seeing it. So I think there's no two ways about saying that, let's call the wrong ones out. That's something that, we should not be okay with, And as far as the NBFCs and the SFBs and the payment banks and the rest of them, I think they are largely okay to kind of get to the lending. My bigger question is, with the interest rates farming up, don't you think the lending itself will get hit, with the overall inflation and the global economy is now flattening, and the rates will obviously go up, and the kind of credits that being issued, these are people who are driving the consumption. So obviously, all of this is getting affected, and the lending per se for the B2C, I'm not talking about B2B, is again largely a prioritized lending. It will get affected, what we have been for. Anyone can answer. I'm happy to hear.
The question is that it will get, because the lending rates are going up, then it will have a effect on the products and people will not lend and all that. So anyway, this lending is not happening on rationality. It's happening because you are trying to build models right now. So they are agnostic to the interest rate, right? When I take a loan on Paytm or a Simple or something like that, I'm just getting that they're giving money right now from a customer acquisition point of view, right? And if you see the journey also, I can't stop my what they call as the credit line I get on Paytm. I don't know how to switch it off also, and I'm quite a power user. So I think right now that, especially for BNPL and all that, they're right now building models. So that will continue. That party will continue. It's agnostic to interest rates, I think.
No, but if you really look at customer segment today, and for the easy money, they are ready to pay as high as 30-40% IRRs. So how far it will get digested and when it will get burst, it's a time game. But customer profile which today we are onboarding across are on the rather non-bank or credit deprived customer who are hungry for credit and hence ready to pay that. So I think that is not going to change until unless some accident happen and we really start thinking of responsible lending in terms of rates, etc. Otherwise, I don't see that will really force or stop any kind of an innovation in terms of fintech side.
Just one point from a B2B side, obviously the impact is much less because balance sheets are cleaner and a lot of economy revival across multiple sectors. But then I do believe that yes, there might be some impact because a lot of B2C lending was driven on the fact that this was a spend line and not a lend line. Right, the entire P2P business there was a lot of subvention, there was a lot of the API, and now there is mandate that whatever is the annual percentage rate, IRR or effective interest rate comes out. Earlier, yes, there was a large amount, it was more, lending was a part of spending, and hence that was supposed to be the real revival in the growth of the BNPL segment, that the arbitrage that people worked in. So I do believe that, I think the combination of it moving from a spend line to a lend line and maybe interest rate arbitrage, lesser that, but more the fact that it's no longer a spend line would have limitations in the adoption levels from a B2C standpoint. Lesser on the interest rate, more on the fact of the nature of the lending sort of changing out.
I think, sorry, because of the paucity of time and we have other panels to run to. So thanks a lot for this. One question which was kind of many people asked, and I'm just summarizing that question, and any one of you or all of you can ask, or sorry, answer that, which is, what is next in lending if we look at this other way, if wings are not getting clipped or anything of that nature, what is next? रजत आपने शुरू करा था तब बालों में सफेदी कम रही होगी शायद उस ज़माने में जब आपने शुरू करा था, तो अब P2P lending, हाँ मतलब आप निश्चिंत रहिए, जवाब देने का मौका मिलेगा. So उससे लेके अभी तक, फिर जैसे सिद्धार्थ ने शुरू करा था NDFI, आपने तो ऑक्सीजो अभी मतलब ये started as of now, but in your journey, specifically P2P or in the SME financing journey, or even our friends at Money Hop, Money Talk and Loan Tap, Early Salary and all of that, there's a specific type of lending which has happened in last 8-9 odd years. If this is going to be on the $1 trillion side from an opportunity point of view, what is lending 2.2? नया क्या होने वाला है? कुछ है, नया कुछ आने वाला है क्या?
तो पुराना ही नहीं कर पा रहे. Anyways, I think this is last 5 years. Me and my co-founder quite a few times discussed. This is the worst time to start a lending business. Start किया तो demonetization हो गया, फिर उसके बाद then ILFS, then GST. So it's like what used to happen in a 5-year cycle. One event used to happen. Event happens a kind of a credit cycle that happens every 12 months nowadays. And I think if you survive till now, we'll survive. Now the feeling is अच्छा ये सब हो गया तब हो जाएगा. So it's like one of those kind of a moment there. I think on the future, I think I'm quite hopeful in terms of technology. I can talk about, I'm quite hopeful around DeFi, though it's not too many people are talking about. I'm very gung-ho about crypto. I'm a great, though I don't trade in it. And with 5G coming in, I think we'll have much more data streams coming, which will be much more authentic. So I think that will require a separate session on what can happen with lending with these data streams coming in. So I think this is the initial infrastructure which has been created around data, basic data, financial data. So the next level will be the behavioral data, and that too authenticated on a blockchain or something like that. So let's see what happens. I don't know. Thanks.
Thank you to our panelists for such wonderful insights.
साइड में बड़े भाई
I would like to request Manish to felicitate his co-panelists, please.
So actually क्या है कि again just to be honest with the audience and with the speaker, क्योंकि हमने कभी इवेंट नहीं करा है और क्योंकि हम इवेंट वाले नहीं हैं, तो हमने बुके भी नहीं दिया आप लोगों को. Thanks a lot for living with our incompetence.
Moving on to our second panel discussion for the day, that is the data-driving decisioning powers, speed, accuracy and efficiency. As cliched or repetitive as it might sound, it is rightly said that data is the new oil, but only if harnessed well. It's useless if it resides somewhere and is not used to take critical business decisions. Data-led insights bring business gains, efficiency, and enable achieving precise targets. In another parallel development, recent regulations by the regulators stipulate the regulated entities to ensure discipline on using data of consumers. This panel will emphasize how data can be judicially used to service customers in a better form and can turn around businesses. I will now invite our esteemed panelist, Mr. Naveen Kukreja, founder and CEO PaisaBazaar.com, Mr. Arindam Das, CEO DMI Finance, Mr. Abhina Suresh Khare, CDO and CMO at Bajaj Capital, Mr. Amit Jain, Chief Risk Officer at BharatPay, and the panel to be moderated by Mr. Rajat Bhattacharya, founder and CEO of Data Sutra. Over to you, Rajat.
So one thing which, and I'll keep on kind of interjecting like this, one thing which we are not happy with, and this is something which at least I have shared with a lot of you, is this, that Devika is not out here. So what do I mean by that is, what I'm not personally happy with is that we do not have a right representation of women on our panels. We tried a lot to get women from Delhi to be out here on our panels. We failed in that. I'm sorry for that. But we'll try harder to next time get Devika on the panel. Devika, putting it on you. Thanks a lot. Thank you, Rajat. Over to you.
Thank you, Abhishant. I'm audible, right? Great. Firstly, can we have a round of applause for the esteemed people out there on the stage who have literally built, what's better than hearing about data making an impact when you literally have 4 people on the stage who have built their organizations on data, who have worked with data in their entire lives. And today, it will be a pleasure to hear from each one of them how they have used, they have experienced, and what are the risks that they see with this. So I'm quite excited, and with that, I'll try to set the context. So in 2008, Clive Humby, a British mathematician, termed something called data is the new oil. And then suddenly it became like a thing, right? Every business was trying to implement data-driven organizations. Data scientists became the sexiest job of the 21st century. But the real question is that, on the other hand, the reality suggests that 2/3 of data generated today in the world is termed as what is called digital waste. And hence, it's also a fact that most of the energy today burnt in the world is to store data. So the real question that I want to ask today is, what is the impact that does actually data really drive decision-making powers? And with that, I'll start with, Arindam sir, how do you see data making an impact in your vast experience of banking and lending? Where have you seen it? Which areas do you see it actually making an impact?
Thank you so much for this warm welcome. And thank you everybody to keep yourself awake on a Friday to about 5:30 and not heading towards the exit doors. So I think let me start. We are to an extent a little bit of data junkies theoretically, and I would not say academically, at least not me, and from professions. So when you look at examples of of different industries, we find it very fascinating. Right? Let's talk about the fascinating part, and then we can talk about the boring part of it. So from that sense, we looked at examples across the world where companies like Palantir, companies like Posur, they have been working for many, many years looking at vast amount of data which we think is not very interesting. Like for example, they were looking at data of expected arrival time of airplanes, where the airline industries knew about the data for many years, right? For maybe whatever number of decades they have been flying. But when any airline flies a commercial jet and the pilot is supposed to give an ETA to the ATC, and then the ATC conveys it to everybody and right to the passengers in, and at this time this flight is supposed to arrive. And then invariably they started realizing that they are missing those timelines, which adds up to various related issues, scheduling, logistics, and cost associated with it, including parking and fuel and so on and so forth. So there was this interesting company which started, I don't exactly recollect, maybe about more than 2 decades back, where they started looking at this data and they started sifting through this, and they said and did more accurate prediction of ETAs. And then that became an industry standard, which went on to save millions of dollars for the airline, couple of airline companies which adopted. If you look at slightly different context, we are living in a world where there are a lot of what do we call covert warfare going on, and there were industries which were getting affected because of that, including big tech companies. So one of the early research companies which started looking at data, which was data appearing on Twitter, appearing on your and mine, LinkedIn, Facebook, whatever it is, and they started predicting violence, right? So they were like, remember the movie Minority Report? Something like that, right? So we love to talk about it because it is glamorous. So, but they did not do anything glamorous. They stopped actual crisis and violence by organizations by Al-Qaeda or by ISIS, which is serious work, which most of the people in at least the civilian world will never know, because a lot of information is classified. But they started looking at the data at that level. And so, thankfully, in the world of our financial services, we don't do anything as so-called sexy and glamorous, but we like to look at data which in the banking world has been in existence for the last few decades. And I'm not even talking about the electronic data which is coming in. But even that data is telling us something, and new signals, which we have been probably avoiding. Right? We have not been looking keenly enough. And now we have started looking at the data, thanks to what he mentioned, the new boys in town, the data scientists, the machine learning specialist, a lot of college grad. So data simulation is becoming cheaper, easier to understand, easier to implement. And all of these have helped us, companies like DMI, to even think of starting an organization as late as 2016, when we thought about starting our digital lending business in retail space, which was dominated by giants, right? Giant banks. So first, our run was, let's see what the data is saying. So as you must have heard multiple times, in a data-led organization, the question is always, what do you know? Not what do you think, right? Think about it, right? Because the moment you ask any person, what do you think, which means that he will give his opinion, which means that there will be biases. But when you ask this question, what do you know, he will go back to the data. So that's the basic premise on which we have started this journey.
I think great. I think key takeaway being intuition and data. And when the CEO of an organization talks about what you know and what you think, you understand how data-driven that organization is. Taking that to Amit, what's your thought in, you've been a part of Bajaj Finserv and then eventually Bharat Pay, extremely data-driven organizations. If you could share especially which are the areas that you see, data becoming really important for you as an organization, as an individual?
No, whether data is relevant, whether data for decision making is relevant, I think no doubts, no one can debate around it and just random say the kind of globally innovations are happening. My experience in the financial services, especially on the lending side, be it my earlier organizations like Bajaj or in current organization, I've been part of businesses which are like largely data led because we have dealt with millions and millions of kind of customers and millions of data points. Right? So I think as a philosophy, fortunately, like Bajaj Finance, like say, wasn't talked about data as oil. Something about 7 years back, they started as a project with data as oil at our organization level. So I think some of the organizations have evolved, they have gone ahead and they have realized it quite early and they have tried to leverage it. I believe everyone has data. Now that availability of data is there everywhere. Someone may have less, someone may have more. I think the power is how much you are able to process it and consume it, how much value you are able to derive. The ones who are able to do it better, they are definitely getting larger benefit out of it. Like people like Bajaj or different companies at work where we deal with millions of transactions of our merchants, like onboard millions of transactions processed. And because of that, so much of velocity of data, we are able to, first have infrastructure to kind of process it. I think that's the most important part. Whether we have an infrastructure, right infrastructure or not, and then whether we are able to kind of consume it effectively to make right business decisions, and how effectively and fast we are able to do it. I think that's what we are intending to do, and so far we have been successfully doing it. There are definitely a lot of scope and a lot of other things which can be done, but definitely as a use case or as a decision making and driving better decisions across spectrum of business and customer life cycle, what we manage, I think it's tremendous and a lot of innovations still to happen.
Great, thank you. I think quite insightful in terms of linking it with the business growth, especially. And with that, Naveen, Paisabazaar has kind of brought a revolution in terms of looking at connecting the lenders with the borrowers, especially, right? So, how has data really been something that you have adopted as a culture in your organization, and which are the areas where you have kind of ensured that it follows that culture? Would love to know about that.
Thanks, Rajat. Like you said, the reason we exist and what we try to do at a very base level is essentially try and put the data together for consumers. I remember before we started Paisabazaar or before the comparison platforms were a thing, if you had to take a loan, let's say 2008-9, as a consumer, what would you do? You would go to your bank where you had a bank account and either get an offer or don't. If you get an offer, then you would wonder whether that's the best offer or not. And how would you validate if that's the best offer or you can get a better offer? You would go to another bank. And by the way, you could not go to any website at that point. You would have to call them or visit the branch. And if you don't get an offer from your own bank, of course you have to do that. The reason to exist is that we try and put that together, make it easier for consumers to get all the data in one place at a very high level, help them make the right decision. The other thing in lending, which is very different from even other financial products or any other comparison platform, is that given the gap in demand and supply, lending is probably the only category where the seller is choosing the buyer, not the other way around. You go to Amazon or Flipkart, you choose the phone you want or you choose the product that you want, you buy it. In lending, if you think about it, except for very super premium, super prime consumers, more often than not, the lender is choosing. So it's important to match the right borrower with the right lender. And that's one of the core reasons we do, as a company, we do well or do not do well. But I'll take a step back instead of talking about only our company in terms of where India is. If you think about any financial product, whether it's lending, whether it's insurance or mutual fund, I mean insurance we also do, it's all single digit percentage penetration. So what's required in the country right now is for the data ecosystem to keep improving at a country level. And there are 2 or 3 stages that have happened in the country. If you see pre-2010 lending, it used to be without bureau. We cannot imagine it now. But I was part of credit card business in early 2000s. Imagine we used to give credit cards when there was no credit score, there was no credit bureau, and it was not meaningful even if it was there. So that's one stage of evolution that happened where the country started getting history and intent to pay through credit bureau, and we know how it benefits the entire ecosystem. There's nobody I'm aware of who does not do the credit pull at the first port of call before lending or deciding to lend. The second development that happened was about 4 or 5 years ago when the KYC data started to become organized and available through eKYC, OKYC, and now happening through CKYC. And there's a third stage of evolution that's happening in the country, still a few years away, where the other core piece that's left in the lending to make an intelligent decision is the ability to pay. What is your capability? What's your income? What's your assets? And hence do you have ability to pay back the EMI? And as and when account aggregators come together, or they get the data together on both salary, bank statements, some other sources, I think that's when the country will start seeing as an ecosystem moving to the next level, and both the cost as well as efficiency to provide the product more accurately will continue to improve. So very excited about the era that we live in, and hoping that at an ecosystem and a country level, we continue to move forward from a data perspective.
Definitely, I think quite the point that we need to make everything come together to be able to actually go into that efficiently, faster process. And I think holding on to that point on the bureau side, right? 2010 it was impossible to even think of bureau, and today it's quite the other way around. Taking that point to Abhina, you have been a part of digital and marketing processes. Where do you see, especially in the digital and the offline journey? I know when it comes to marketing, people think a lot always on digital. But I would like to pick up both digital and offline, and especially from a customer acquisition perspective, be it an NTP or an NTC customer. How do you see data really play out, and what are some of the principles that you follow in your organization or areas that you want your team to focus on? If you could highlight that.
Thank you. Very interesting to listen to all three of you, in fact, on the points. How we see is fundamental thing with Bajaj Capital, which I represent. We are a 58-year-old organization. It is driven by a set of values which has helped us stay relevant for 58 years, 6 decades. Going through, when COVID happened and everybody was panicking, our management said, don't worry, it will pass. Because they have seen Indo-China war, and they said, this happens, don't worry about it. Cut few salaries, good opportunity to figure out the bottom line for non-performers. Manage your this, profitability will go for a hit. Fine, help all your employees. Don't worry about it. And it came out very surprising, because every time I was sitting there doing the digital transformation, because that was the time when I was given the task of being the product head and also the marketing piece which came in. The fundamental aspect what we drive in organization is that build wealth for generations and help them protect it. So any decisions that happens has to pass through this litmus test. So when we push, like from the age group I come in and the segment I sit with, everybody want me to do crypto. I also want to do crypto. I want to add that as an API pool in my ecosystem and say, let's show this. I don't get an approval. They say, you love it. We think it's dangerous. Don't make that decision right now. I said, every data is telling me to be their boss. Right? Help me do it. I tell the board. I fight. And they say, hold on. Right? And eventually the Mr. Senior Bajaj, what we call our founding, Chairman Emeritus, says, no, I'm not aligned. We say we want to give an NFO of this particular mutual fund coming. It's brilliant. They have built an analytical engine and this is going to be great. He says, is it AAA rated? We say, no, that is yet to come. Well, let Bureau figure out, let people figure this out. He will call up Nilesh, Mr. Nilesh from Kotak. He will call a few people and say, what do you think? No, don't give it. Why? Because he says our job is to protect the wealth and provide them with right insurance. Now, when this has to happen, all my data, the data lake we build, how we build it, everything is connected about serving the family to manage wealth rather than getting that one transaction. Because they say we are not going to drive acquisition and have that customer sitting in, it's a cost. So once this value system, it took us some time to figure out, then comes the marketing piece. Now, for us, the first important data set is employees. Right? So for the last couple of years, what we have really been able to solve by using some very interesting tools in the market, I can name also Lena.ai. We use it extensively to figure out who is going to leave our organization in next 90 days. Right? Which is a bigger problem for us to solve for a 4,200 plus 15,000 employee base, something around 20,000 people. Because rehiring, putting up an RPO, getting that customer to understand our ecosystem is a bigger mess, right? So we first see it on the employee piece of how I can do the data. And when the world was saying, data is the new oil, we were saying data is the soil. What you grow on it is going to build on it. And don't worry about the oil piece, because oil needs to be drilled, soil needs to be cultivated. Figure out how you are cultivating. So my all decisions are, data is the soil. How am I going to cultivate and be the farmer when all around me there are so many hunters and they have the monies to hunt. I do not have the monies to hunt, which by doing 2 startups I want to hunt. Right? In my personal career, I really want to hunt, but I can't. Right? Because there is a CAC and that cost has to be cross-sell. So another data that we have been able to really leverage on is 4x4 metrics. So we are an organization, we posted somewhere around a 6x profitability last year, right, post-COVID. We could do it because our whole data strategy was, can we create processes to cross-sell and upsell? We do not want to acquire new customer as a goal. Nobody cares a lot, right? When I say that, I have 20,000 customer acquired this week, they say, okay, so what is the average revenue you earn? And we say, this is 500 rupees SIP. In 1 year time, on that rate, I will make some 1 rupee, right, on this. They say, sorry, we are not interested. So what gets measured, get delivered, kind of thing. So the data decision second happens basis cross-sell, upsell. I would really want to sell a credit card to a high net worth customer, right, who already has 3 credit cards. So what will I sell him, right? That is the questions we end up asking. We are doing loan against securities. In fact, yesterday we tied up and launched our loan against securities for mutual fund. And we are seeing a very good uptake. Right? Because even at a 13%, as high as a 13% lending rate for a LAS, the HNI is saying, fine, give it to me. Right? No problem, I will figure it out. So that will not be a lot of customers, but the customers will be deep for us. So what our strategy for whole data is, can I keep this customer for everything, right? Rather than trying to keep a customer. And then the second part, because we are not number one, and we are very clear we are not number one. There are many people who are number one ahead of us on each side. So we let number one prepare it, right? We will learn from the best practice of number one. We will be humble enough. But the challenge is how to be nimble enough for an organization with an average age of 45, right? At times, we have brought it to 29 right now and want to go to 24, 25. That's the challenge which we are trying to solve with data. And that's where the whole marketing piece come in. To be precise, to cross-sell, rather than enabling the relationship manager to actually do that is the bigger challenge. Because I will just take 30 seconds and give an example. My relationship manager, I tell him that I have a brilliant CRM for you. So here you can see every transaction of the customer. He says, I don't need you. I said, what do you need? He says, LinkedIn में और Facebook में क्या किया था वो बताओगे? Because I want to talk to him when I go, कि sir, how was your Bali trip? Right? If I can talk that data if you can give me, I am more than happy to use your tool. Otherwise, it's a push of technology and digital products. So we are developing the ecosystem in a very different way and being nimble and trying to make decisions, precise decision, combining intuition and backing it. He said, Amit said in fact that don't tell me the thing that what do you know. Arindam said it. Right? So that's how we actually look at it.
Great. I think sets up quite a number of aspects about this discussion, but my key takeaway will remain, I'll change the topic from data is the new oil to data is the soil for now. So eventually moving to, Arindam, there are three types of data that we typically look at, right? I mean, one is data that sits internally within an organization, then there is the data that you collect as an organization, and then there is data that you augment from outside coming in. My question to you is on two fronts. First, which of these are a challenge to you as in the industry? Particularly, where do you see a challenge in each one of them? And where do you think we draw a line? Where do we say that, hey, this is all that I need, I don't need to go further?
That's a very, very difficult to answer, because if you think from a modeling perspective, let's say, as you said, the first one is residing inside the company. Question number one is that how long? Because the modeler will ask, is it a clean data? Is it relevant? Can I use it? Outdated? So on and so forth. And especially in lending world, right? We are living in a world where the tenors have shortened, loan amounts have shortened, thanks to new innovation, thanks to embedded finance, consumerism, rate of interest, manufacturer-driven and manufacturer-pushed programs. Data is moving at a much higher speed than we would have expected, and hence redundancy is very high. So that's a challenge in that kind of environment. Second, you said what we are getting from outside, right, which is outside in. Of course, extremely valuable. We would like to glean as much as possible, sounding very greedy, but it is not possible because there are boundaries. Boundaries coming out of not only regulation, boundaries coming out of moral sense. That what is enough. Ask any lender today, on the 20th or 25th, any collection guy, he would give his left arm to know how much bank balance that customer who has defaulted on his account is carrying on his second account, or how much money he has in his wife's account. Like Avinda mentioned, that tell me what is happening on his Facebook and Instagram so that they can be a conversation starter. That what did you do in Bali, right? Rather than asking, do you know what happened on Nifty 50? For us, that's the tricky part, that how much is enough. I remember when I started looking into this kind of world, which is data-led decision making, start of this decade. There used to be a company which just about started and just about flourishing in Europe called Klarna, and I don't recollect the co-founder's name at this point in time, but he mentioned that they use close to 20,000 variables. And I, like a fool, not from being the data science industry, said, wow, 20,000, that sounds amazing. And then I started discussing theoretical debates, and then somebody explained to me that it means nothing, right? Because most of them may not be even relevant, no signal value, right? So in this world, it is not more means better. What we have to figure out is the one-factor authentication. Obviously, it's a, what you call the holy grail. Nobody has ever found it, but that's where we have to look at. And the third piece which you just mentioned, which is augmented. So I don't know augmented means variable or multiple things. For us, augmented can mean derived, right, or inferred thing. Like for example, in one of our programs, which is an industry first, where we, if the customer is behind on his payment, we can deny the customer the use of the product. It's an IoT-based thing, and we can deny the use of the product. We never understood the power of that denial of that service because it was too soon or too initial for us to understand. And only after looking at it over multiple years, multiple cycles, we started understanding the power of it. So that's something which is an augmented data, which customer is not generating on its own. It is getting generated by default, right? Like for example, these days, any EV which is going to get financed, the battery is connected, and if I dare miss my payment, next day morning, I don't think so, me or my driver can take the vehicle out from the garage because somebody will have switched it off. Chances are Hero or whoever finances auto vehicles, they would have switched it off, right? So that's the power of data.
There'll be some interesting legal complications that will emerge once that starts to happen.
Yeah, so those are the moral boundaries, that what is the level we can go to. So I would say these are the challenges we at this point in time.
Definitely. Thank you. So taking that discussion, right, Amit, today the question that I want to ask myself is, who is a good lender? Is it someone who's going ahead and doing financial inclusion by really progressing very fast? Getting NTC, NTV customers by getting data from other sources on that? Or is it someone who's really restricting themselves from the risk side? I mean, I'm sure you face the push from the marketing in terms of the business in terms of providing loans, and on the other hand, from the risk side in terms of reducing your NPAs, right? The job must be very difficult, right? Where to say no, right? What data parameters, I mean, from your perspective, what are the principles that you follow or the framework which tells people that, hey, this is where you don't go beyond a point?
I think what Arindam just said, like data is available. The important point is to understand the relevance of the data. Which data is relevant for the decision making or risk decision making decision or because of the ecosystem and the digital way of doing all kinds of things, data generation is happening all around, right? And as I said in my last comment also, now we have infrastructure. We are very strong in data engineering. We have progressed very well in data science. So, most of the organizations are focused there. But yes, what data is relevant, whether that is something, how you can control the usage of that relevant data, and what is not relevant, how you discard. Because more the data, I think it becomes, if you are able to consume data, unless you are able to take right decisions, conclude it well, it's more of analysis and paralysis, and probably delays the decision making is what I believe. Because if you are not clear what you exactly want to look at and derive out of the data analysis, then you end up only doing the level 1, level 2, level 3, level 4 cuts, and end up delaying your decisions and end up probably taking decisions which are more of intuition and your past experience or your personal biases. If I have to take a lending or underwriting decision or a certain strategy working, working along with the businesses. I think first principle is that first of all, the organization or the people who are working towards it should align. If the goals are not aligned, then definitely there will be push and pull from both the sides. So if the goal is aligned, then it's the responsibility of the relevant person to find out that relevant data and data points and try to create certain model which works effectively both from business point of view as well as lending decision point of view. Right? So I think for me more important point is identifying the relevance of the data, and then over a period of time you continuously kind of test, learn, basis your learning you keep discarding data, right? If something is not relevant, right, it's not predicting anything, you keep continuously discarding. You can't just keep gathering that and try to put it in a, say, a black box or a machine learning kind of a model and try to see what works, what doesn't work. I think from a risk point of view, I think a lot of it cannot be machine learning or a black box. This is my experience. Having worked with data, both using data and intuitive decision. Risk decision generally cannot be too much of black box. You need to play a certain amount of control and relevance, and also see prudence of what happens.
Thank you. I think that quite provides a framework in terms of aligning both the push and the pull, right, in terms of the business goals and the vision. On that note, Naveen, today RBI's regulations have kind of brought in a lot of restrictions in terms of privacy, etc. And the word in the market is it stopping the fintechs from growth? Is it restricting the usage of data? These are the questions that are coming up, especially from a TSP perspective, especially from both the lender and a TSP perspective. There are certain ambiguity in terms of, hey, what's allowed, what's RBI going to stop tomorrow, what's going to happen, right? So coming on to data privacy, what's your take from a regulatory perspective? What's your take on the regulator's decisions? And where do you see this emerge?
Yeah, it's very interesting. I think I've heard regulator a couple of times, not exactly on this particular point, but on similar kind of issues which they were grappling with, and the regulators take in general, which is a very good take, is that till it's at a certain level, which means it's small, they do not want to bring out regulation. Rajat is not there, but P2P is a great example. P2P regulation is something that the regulator was not keen to bring. I know that we are there in the industry. I think some of the lenders went to the regulator because they were unable to raise the capital, and they said, please bring out the regulation because the investors are looking for clarity in regulation. And then they of course came out with the regulation which was not to the liking of the investors, and that actually further restricted the players and the capital raise that they could do. So the regulator tries to, that's a good part of the regulator, that they try to not intervene till the issue or industry is at a small level, or the initiative is at a small level, or it starts to create problems. And I think what we are seeing now over the last 2, 3, 4 months, in terms of the flurry of regulations coming out, is a result of the problems which went a little bit out of hand, became political, government, and then beyond a point regulator also reports to the government at some level. May not be able to make it a public forum, but yeah. So from the regulator perspective, in these regulations looks very clear to me. Essentially they're saying that there was a freedom to do things. You guys did not use it really well. So let us come in. And when they do that, it's not always very objective or very clear. And the restrictions are far more than they should be. And that's what we're seeing right now. My sense is that the demand-supply gap is so high, and the industry and the innovation is right now moving at such a fast pace that the smart and responsible fintechs will find a way. There would be some delays in the progress or the speed at which some of the innovations were happening, but it will continue to move in the right direction. Some of those there are some, I would say, stupid things that also come out. I think whitelisting of lending is one such example. It's unimaginable how it will work, but we'll see. Now that statement is already out, and if you notice that that didn't come out from a regulator first, it came out from a politician first, but the regulator has to honor it now. So there will be some push and pull as the industry evolves. As participants, we have to try and be responsible. But when the opportunity is so large and the participants are so many, there will be some people who will get overexcited and cause accidents, and then the regulator will come from the other side. So I hope that the regulation will not, I don't think it will be able to stop the innovation. It will slow down a little bit, but I hope people like all of us and some of us sitting on stage will help keep progressing the agenda of the overall ecosystem.
I think well put. I mean, I think I remember one of the lending apps was finding out who you are calling, and then would eventually let people to call them up and call their social and so do social blaming. So definitely need for the regulator to come in whenever it's needed. We've talked a lot about a regulator from an RBI and a risk perspective on this front. My question on data privacy to you will be more about, I mean, in your last point, you talked a lot about the importance you give to cross-selling rather than acquiring new customers, really focus in terms of understanding and protecting churn and all that. Today, in the last few years, I think most of the best brains in the technology space have put their effort on making users click an ad. And that has kind of resulted in a lot of precise targeting, as we may call it. What's your thought in terms when it comes to this precise targeting that is out there, especially from an ad tech perspective? And what do you tell your colleague when they say that, hey, tell me about the LinkedIn and Facebook point, right? Where do you draw a line when it comes to precise targeting, and what is precise to you?
Very interesting question. I must say a lot for me to learn from what all three of you spoke, and a lot to implement. See, what we have been not able to solve as an ecosystem, I believe, right, is differentiate between a customer's need, want, and desire. And that is where the fundamental challenge of setting up precise targeting is. Right? Giving a 24-year-old in first job at 15,000 or 20,000 rupees per month, or 30,000, like a typical 4.5 lakh, the ability to buy an 1.5 lakh rupees iPhone, right, versus starting a SIP, just doing there is no explicit alarm, right, which a system has built. And all these are like ticking time bombs, right? And before you realize, at the end of the day, you want to make money. Right? We are into the business of making money from money. And it's very good to talk about being on the edge of doing certain experiments. Right? But we see all organizations which have gone J-curve have cracked a loophole or a communication loophole, right, which has actually given that fillip. Honestly, in the internet space that we live in, the power of growing slow, doing unsexy things, right, is not very appreciated. And nobody is also interested to know about what the boring things you are doing, right? But there is a lot of power there. So now, I will give you an example. When my relationship manager or my CBO, Chief Business Officer, says, tell me who are interested to buy this card from me, or tell me who is this interested. The typical question starts with, how much business do you want to do from this? Right. Second is, where do you think which kind of relationship manager can actually sell this product, right? And then using that as an insight to do remarketing on Google and getting customer interest, rather than actually doing a mass blast, right? Hey, if you are interested, buy the COVID policy here, right? To only 2,500 rupees, and you can actually do a Twitter. There was a on Twitter there was a yesterday it was a lot of discussion happening by one of the journalists who tweeted that from Razorpay a payment link came in from a well-reputed organization, and they were asked just pay this, right? And they were asking whether this is a spam or what, right? See, we need to do precise targeting, but rather than call it PRECISE, you try to do PRESIZE, right? And see who are interested in that cohort, right? And try to sell. That is the first part of the equation. The second part of equation is sell products which, for us, very critically, sell products which are not going to wipe out his entire wealth. That is very critical, right? So there are nudges that we have built. We have just launched one of the most advanced report on mutual fund, on investment, called Edge Report, right? Where we are able to show somebody's all mutual fund investment, their NPS, their FD, their bond, their PMS data, right? And we are trying to also show where their insurance is and tell them through that data that you don't need this much cover because you already have a credit card which will actually give you a travel insurance this much, so don't go for it, right? So what you want to do. Now, business comes and tell me, why the hell do you give so much information to customer? Because when I go, they go there and test that they don't need it, right? Like everybody in last, 10 days have been talking about putting your rear seat belt so that how much insurance claim can you get? Or what will happen to your insurance claim if you are sitting in the back seat and you have not put your seat belt because of the Cyrus Mistry accident, right? Now, if you actually give this clear insight, the sales will get hit. But should you give this insight or not? Yes, absolutely yes. Right? So, there is, like what Amit said, I have to do it basis my, intuition. I got a data scientist in my team, right? Couple of them, I got couple of agencies also. They did an analysis of my 300 branches. We have a 300 branch network, and came and said, 40% of your branches should be shut. This is the analysis they have for last 5 years, not given you 4x growth on their cost. You should shut it. And that's the analysis. That's the data is speaking. Now tell me what decision should I take? Absolutely. So if I go ahead and shut it, I am moving away from shutting a complete city where people actually buy other products, not from there but directly. They come to my website and have taken National Pension System from Agra. I have a very high. We are number 2 POP in National Pension System. It's a product which only gives you 225 rupees. Nobody wants to sell that product, right? National Pension System is a brilliant product. If it saves you tax, you can, and many of you won't invest because all of you sitting here are at 30% tax bracket. You can without fear invest 10 lakh rupees and 2.5 lakh रुपए उसी साल का बचेगा because वो तो 30% tax में कट ही जाता आपका. But nobody will tell you because it only makes 225 rupees for a POP to push you NPS. Nobody wants to build it. Even people who come for National Pension System, उसको NPS नहीं बेचते, उसको कोई NFO बेच देते हैं, या उसको कोई insurance HDFC Sanchय Plus बेच देते हैं, which I am telling you a brilliant product. Everybody say with a 6.1 IRR, and people who understand it will laugh कि effectively तो 4.1% मिल रहा है, which is nothing, right? But we will sell that because margin of it, right? Just for a lot of you to understand, an LIC agent, right, who sells you a 1 lakh rupees policy, on the first year makes somewhere around 64,000 rupees from you. And he continue making 30,000 rupees every time you pay. That is the kind of, margins we are talking about, not a 0.02%. So now it's a very big decision that should the guy who will give you 225 rupees, who has come to your website as a magnet, as a lead magnet, you can call it as an NPS, right? Will you sell him NPS or will you not sell him NPS? Right? That's where the game really challenges for a marketer and a product guy, combining it with the business guy, and that's where CEOs come in. I have 2 CEOs sitting with me, right? And that's where all the decisions happens. I believe that's where the whole game is set. Because customers are enough. And last point that I see is what Naveen so nicely mentioned. Who is expanding the market? We have left it for government to actually expand the market. The things that are happening on MFI, right, on the mutual fund side I'm talking, or from the IRDA, right, kind of portability coming in. They're talking about a single repository for insurance, which is not there, right? The next revolution has to come after account aggregator is a health credit system. Like I have 850 score of 900, but what about a health score? If somebody can give me 800 out of 900, that my life span is going to be 100 years, why will you not lend me? You will, right? So that's the ecosystem we are talking about in the precise time.
Absolutely. I think just reminds me of something I've heard when I started learning data science was data science is the science of empathy. I think that's the most important factor, and as long as you keep empathy, I think your data scientists who reported 40%, if he had, when he learns empathy for business, I think that reporting will change, and I think that's when we will also try to take in data privacy. I think quite an insightful session. I feel I've learned a lot. Thank you, gentlemen. I think can we have a great round of applause for the wonderful words that we heard today?
Thanks a lot, Rajat. We have time for just one question from audience. If there is a question, we'll put it to them, to the panel, else we can close it. Please put, so one data point, which is only put question.
Hi guys, thank you so much. I have a question for mainly Arindam and Amit. It's around probability of default and in the lending business when you're lending and when you're looking at like multiple data points. Traditionally, there are various methods you look at, but can you specify? Having gone beyond those methodologies, has it helped your business in recouping what's the capital that you lend? Simply.
And another data point just from the conversation, which is to please keep your answer precise.
Just to keep it short, I think probability of default is what we end up working towards in lending, right? So reducing that, minimizing that, or optimizing that. I think that's the fundamental that remains and that will remain. How to do it, the mechanics can be different, and that's something, it's an evolving thing. There are various kind of tools and techniques being used, but I think eventually everyone who's in the lending space, they want to optimize and improve the probability of default by using different techniques.
Sorry, I didn't get your name, but let me
My
try.
name is Zaki.
Hi. So let me try to, no pun intended, confuse you rather than give you clarity. This afternoon, Naveen and myself, we were having a chat on lunch, and we were talking about a particular segment where our data scientists and our modeling team and policy team said on a particular segment, the probability of default on the lifetime terminal loss is going to be high single digits or low double digits. So Naveen is looking at me and said, what? Somebody else told me, and another, some smart bunch of people from some another organization, it is not possible. And let's do an immediate call because it is indicating at our end, same data, same segment, it is mid single digits, possibly low single digits. So it's extremely difficult, right? There is no silver bullet answer to this. It is always an Occam's razor. depends upon circumstances, depends upon what techniques you are using, depends upon what data, depends upon so many assumptions, right? And it comes out like we have seen, same product, same customer or same type of customer, if not the same customer, goes to two different channels and the behavior turns out to be very different. We don't know yet why, right? Because we don't want to answer like a hippo, but we want to answer what do we know, and at this point in time we don't know. So it is not a precise science. It's an art and a science mix. You have to continuously try. In our world, we call it keep iterating, keep recalibrating, till you have a very comfortable, feel of what you will see in that sector.
One point is that if I had given you the data point that I worked for Capital One, maybe you would have addressed the question to me also.
Thanks a lot, gentlemen. Thanks a lot for joining us. I will request Rajat to hand over the bouquet to our panelists. Thanks a lot. And to our photographer, was good photographer. कभी कभी गलत डेटा साइंस के इस्तेमाल से वो भी होता है कि बर्बाद गुलिस्तां करने को बस एक ही उल्लू काफ़ी था। अगर हर शाख पे उल्लू बैठा होगा तो अंजाम गुलिस्तां क्या होगा। तो इसलिए ये मैंने थोड़ा सा उसको मॉडिफाई करा है, केवल जो है वो डेटा साइंस के सत्य को असत्य के बीच में कहीं ना कहीं घुमाने के लिए। Thank you. Thanks a lot.
Moving on to a third panel discussion now, the topic which is most discussed and is always in the limelight, digital payments. Paving way for 1 billion transactions in a day. Payments for a long time has been at the centerpiece of the fintech boom. From wallets to cards to UPI, digital payments are growing exponentially with the new use cases and modes emerging frequently. What's next for digital payments? Beyond 1 billion transactions in a day. The panel will deliberate and discuss all things about the future of the digital payments. I would now like to call upon our speakers for this panel discussion, Mr. Venkat Ram Jayanti, MD and CEO of India Post Payment Bank, Mr. Priyam Alok, President and Chief Business Banking, AU Small Finance Bank, Mr. Vineet Singh, Founder and CEO Castler, Mr. Rajnish Arora, Co-Founder Product and Strategy at Spice Money. And our moderator for this panel, Priyanka Kanwar, Co-Founder Falcon. Over to you, Priyanka.
Sorry, Priyanka, we were having such a lack of women on panel that our friend almost forgot.
Yeah, that needs to change.
Yeah. So thanks a lot. Thanks a lot for ensuring that we have representation from women out here. So this is something which is interesting. This specific conversation before these people settle is interesting from the point of view that almost around 3 years back, somebody at NPCI told me that we are gunning for 1 billion transactions a day. And that is something which was a thought process in the organization almost 3 years back. We are still far from that journey, but as an organization, when they looked at, and some of the things that, because of the fact that we work closely with NPCI, we are privy of, I can tell you with a certain level of certainty that the 1 billion transaction kind of a day, kind of a volume is not far away, and some of the most interesting products from NPCI stable you will see in next 6 months time frame, which will catalyze that journey further, and you will be amazed by the level of platformization NPCI is bringing with those products coming in. Thanks a lot to this panel for joining us, and thanks a lot Priyanka once again for joining us. We were so short of right women on the panel. Thank you.
Thank you so much, Vishant. I think that's a bigger problem we need to solve for in FinTech, which we will. But really lovely to be here with all of you. And I think, I will obviously sort of weigh in on what Vishant was talking about. But first, a quick round of introductions. I'll first introduce myself quickly. So I'm Priyanka. I'm the founder of Falcon. We are a banking-as-a-service embedded finance player. And we help financial institutions on the one side, and then on the other end, we help tech companies to launch their own fintech products, such as payments, lending, accounts, as well as several other, interesting products, very, very quickly. Our USP is speed, because I think in the fintech ecosystem, that's very, very important, very crucial, and it takes ages sometimes to do integrations and get off the ground. So we make that super easy. And I'd love to, get your introductions as well before we get started.
Yeah, thanks, Priyanka. So, my name is Rajneesh Arora. I represent Spice Money, and I'm sure most of you won't know what Spice Money is. So, we are a rural fintech. And just to clarify, by rural we mean, villages and small towns. So if you divide the country into 700 district headquarters, 5,000 blocks or small towns and 6 lakh villages. So we serve customers in 5,000 blocks and 6 lakh villages. We are solving the problem of access of financial services for the rural citizens. And the way we are doing it to make it viable, right? So, I mean, rural is underpenetrated because it's been unviable to access. And to make it viable, we bring in an existing infrastructure of merchants or kirana stores who are already present in rural India. We enable them to serve the customers or make the customers access banking and financial services. We have about 1 million such merchants in the country, and we serve about 2 lakh villages currently out of the 6 lakh villages. And we process about $20 billion worth of transactions on an annual basis. Thank you.
Yeah, hi all. I am Vineet Singh. I am the co-founder and CEO of Castler. Castler is a transaction banking SaaS product. And we are just, you can say, 15, 16 months old. So good traction. We are focused on only one banking product right now, that is escrow. So maybe we'll talk about that during the course of our discussion as well. So good being here. Thanks.
Hi everybody, I'm Priyam. I am from AU Small Finance Bank, which is the largest small finance bank in the country. I am with the bank since the time it was an NBFC. I joined them as to lead the bank project then, 2016. And right now I lead the business banking vertical, which is into MSME financing. Thank you.
Hi, good evening everybody. So I represent India Post Payment Bank, which is a banking arm of Department of Post. As you all know, Department of Post manages post offices. So we function as a digital banking arm in terms of powering them with various banking products and services. And as a part of Payment Bank, we also power the department with various other government to citizen services. And we do have interest in working with a lot of fintechs. And recently we've launched a program called Fincluation, which is innovation for financial inclusion, to get more and more fintechs to partner with us in terms of innovating with few products and services, where we can take those products and services to the rural areas. As you all know, technology is one complicated element of what we all do. Sometimes it becomes difficult to develop products and services, which is what is available with fintechs. And I strongly feel that if we can work with the right set of fintechs, probably the problem can be solved. Thank you.
That's great to hear. That's actually one of my favorite lines to hear from bankers. as a fintech. Thank you so much for the introductions. I think the topic here is of course broad, and what for me 1 billion transactions in a day means is not really this only it's not only the number. It's just so much in terms of possibilities, right? It's about an expanding data mine. It's about bringing people into the financial economy that never had the chance to do that. And honestly, I mean, I'm an eternal fintech optimist. I'm an eternal India optimist. I think the way that we have grown in the last 5 or 6 years, there's very few countries who have ever seen that kind of growth in the payments ecosystem, right? I think when you go abroad today, we are very proud of what India has accomplished in the last 5 years with respect to UPI, account aggregators, so many protocols. We talk about this literally every single day, right? But today, what we're here to talk about, which I'm excited about, is the future. That, when you look at the math of this 1 billion transactions a day, today we're at 250 million. So we're looking at a 4x growth, right? So what I want to talk to you all about today is that, number one, where do you see this really coming from? How do you think we can get there? What are some of the flows? What are some of the categories and use cases that you think, especially in the retail payments that remain untapped, where we can go from here, right? And secondly, also, what are the challenges? It's not easy. I think Abhishek was mentioning this, that, Dilip said that if we all rally around this goal, we can get here in 5 years instead of 10, right? But it's definitely not easy. So I'd love to hear from you both about the potential as well as about the challenges. Would you like to go first?
Sure. So I think, I think there's absolutely no doubt that we can reach there. And I won't be surprised if we hit that milestone even before 5 years. I mean, given the way we progressed, in the last few years. However, I think as an ecosystem, I think what has brought us here may not necessarily take us there. I think that also is pretty much quite clear. I think the driving force from here on. So one, I think we talked about use cases, which means that if I'm doing X transactions today, can I do 2x, 3x, 4x? I think yes, one answer is sitting there. But I think the other, the high impact answer probably sitting in the fact that how the next 250 million users of digital payments or UPI, and from where will they come, and how will they come? Very clearly that, the penetration is, much higher in urban. So I think as per a survey, it is much more than 1 in 2 households, if I talk at a household level, in urban, versus when you come to rural, it is, 1 in 4 to 1 in 5 households. And at an individual level, this further combines because there are probably 2 or 3 users within a household in urban versus probably just 1 person in those households. So the answer is clear, it has to come from rural. Now, you can say that, the apps are there, people can download and they can use. Can it just happen that people just the adoption can just happen organically? To some extent, yes, and it is already happening. But I think, I think the important point is that when you talk about rural, if I were to visit, villages in say 2019, which is pre-pandemic, digital payments was kind of nowhere to be seen. It was literally absent. It was there in bits and pieces. 2022, when you visit a village, I think almost every merchant has a QR code there, right? So pretty much, people are aware what digital payments are. They know what benefits it could bring them. Everybody's seen somebody using, sending money to someone digitally, scan and pay. So I think that barrier of saying, to explain people what it is and how will it help them, that has been a big barrier in the past. I think that, that's been the upside out of COVID at least, that is off. People want, right? Now, having crossed that barrier, having high intent, where are the challenges? So I think the challenges broadly lie, as per our understanding, 2 broad buckets. One is that there are real friction points and infrastructure issues to really get onto digital payments. The very basic ones being that probably more than 1/4 more than 1/3 of bank accounts in rural are inactive. Right? I mean, that's a starting point. If you have an inactive bank account, how will you get onto digital payments? Then you need to have a debit card, then you can get onboarded. So, rural, having an active debit card is a big, big gap, right? Then of course you need the right mobile number to be seen. So if you look at the funnel, start from 100 of people having high intent, it really comes down to the real infrastructure issues. And to be able to solve that, where is the access, right? You have to really go to the bank branch, which is 30 kilometers away, have a very high intent of solving that problem, and then you will be able to solve. So I think that is one part of the problem. Definitely needs to be solved. The second part of the problem is, if you ask someone, you know someone who's used digital payments, the answer is yes. You know someone who was defrauded when he used digital payments, the answer is also yes. So a lot of fence sitters, fear of the unknown, not knowing, so having high intent but not really clear, right? So what do you need there? You need influencers, right? You need people to be able to explain how to do it. At the same time, also create a safer product, right? So can we as an ecosystem create a product which is genuinely safer, right? And caters to that segment who is risk averse. And then I think largely these two buckets now, and of course, for sure, vernacular languages, a better user interface. I think that's given. I think that is something that very easily solvable. But I think the first two pieces really need a very different approach to solve. So I think broadly this, and let other panelists speak. So otherwise I'll keep going on and on. It's my favorite subject.
Thanks, Priyanka. And so look, I have no doubts that if an agenda is set of 1 billion or maybe 2 billion, 5 million transactions a day, sooner or later it will be achieved in India. But from a more, you can say, broader context, let's look at it from a stakeholder perspective. So there are 3 stakeholders here who are involved: the government, the operators, and the regulator. So from a government perspective, yes, they want more and more traction and adoption of digital payments. It helps them track down tax evaders to some extent. It helps in maybe controlling fraud. It also helps in reducing cash, because consumption of cash, the high level of cash that we have in India, is in a way a money laundering and a national security issue. How will we eradicate terrorism if people can have billions and billions of cash floating around our economy? So yes, the government of India at an agenda level, they want more and more digital payment adoption. Let's talk about operators. So I put operators in 2 buckets, or 2 kinds of operators are interested in today's scenario to get into the payments business. One set of operators, they use payments as a customer acquisition tool, and but their main business lines, revenue models, are in other services that they provide. A lot of them are getting into lending because they see a clear 8-10% kind of a margin bucket there. But it's not that a very easy business to do, as folks have started discovering now. The second set of operators are operators who are slightly more smarter. They try to stretch the rubber band, as one calls it, to the maximum fullest extent, and they do, you can say, non-compliant business models: crypto, gaming, chit fund, or whatever. अब इसमें बहुत ज़्यादा पैसा है. The other one, the first operator case, there is very, very low revenue, no path to profit if only you are a core payments only player. In the second one, there is 2% to 10%. Okay. So like we are sitting on a business pipeline of hundreds of crores every day, where people are willing to pay 2% to 10%. We don't do it because our banking partners say no, that this is not the kind and quality of business you should be doing. But naturally, business being business, pressures from here and there or whatever, there will be people who will, you can say, slip on the banana skin and do these kind of businesses as well, right? Third, let's look at it from the lens of the regulator. Now, the regulator, what does the regulator want? And some of the agencies who are semi-regulator and so on, they want zero touch, zero time, zero cost. Okay. So why are we discussing here? We are in the business of for profit. Okay. So as far as Castler is concerned, we have found use cases where there is no requirement of zero touch, there is no requirement of zero cost, and there is no requirement of, you can say, zero friction as well. That's why we make money. Okay. But the agenda of the regulator and the semi-government bodies is this: zero touch, zero cost, zero time. But at a compliance level, their agenda is totally contrarian. They want full KYC, okay, across levels, however long the value chain may be. So if a payment transaction happens where there are 20 parties involved, and if regulatory scrutiny comes, they want full KYC of all the 20 parties. Now this is a very esoteric quest. So I think we are at very, very early stages. All of us have to realize that two black swan events happened in India in a very, very short time period, the demonetization and COVID. That has helped India leapfrog a couple of decades, maybe 3 decades, as far as digital adoption and payment growth is concerned. But regulator में leapfrogging नहीं होती, right? So I guess Abhishant and Rajat in a panel earlier, they said 1 year for the new digital lending guidelines. For me, it is about the next 10 years. I think it will take next 10 years, a decade, for India to build a digital kind of financial services regulatory model so that fintechs can operate and work in peace. So I think we have to bear with it and innovate and work in constraints. We have to learn that. I think the rush for mad growth will only lead to bad results.
So, we have all grown in a big way in the last 5 to 6 years. If I talk about digital payments landscape in the country, we have grown by a CAGR of around 58 to 60% in the last 6 years. Now, if you extrapolate that, you can achieve 1.5 billion, 150 crores transaction from 26 crore currently in the next 3 to 4 years. So a simple math would be extrapolation of current CAGR. Having said that, the denominator has increased. So obviously, even if that doesn't happen, 100 crore transaction per day is not something which is very far-fetched. The question is when and how. So I think it will be sooner than later because there's a very proactive approach of the regulator and the government in addressing all the issues which come to them. And therefore, they're constantly, writing, and scripting things like Vision 2025, which RBI recently published. And there are a lot of things which are covered in that vision statement of RBI. Now, if I just talk about how the growth has come, and if I look at the UPI numbers, overall the UPI volumes have grown by 9x, in the last 3 years, courtesy COVID. And even in terms of value, it's grown over 10x. So the growth is, in terms of, I talk about registered users, that's grown, registered users with UPI, that has grown by 15x. So obviously there is serious adoption happening, and digital payments and digital way of life would be is here to stay. Now, if I talk about from where the maximum growth would be coming, so in my view, the maximum growth would be coming from the merchants, from merchant acceptance in the offline mode, which is essentially the QR code. So again, if I look at the data, in 2018, we had around 2.5 million merchants registered with the QR code. Today, that is 30 million. So from 2.5, it's become 30 million in 4 years. And what people feel is that in the next 2 to 3 years, again, it will be reaching around 40 million. And this obviously would be happening big time in the rural part of India. Another issue which people have is the internet connectivity or having transactions in the offline mode. So 5G is coming. I think that's something which would be aiding. Two, what RBI has done, we all know they set up a regulatory sandbox in 2020. A regulatory sandbox is essentially for carrying out all kinds of innovations and experimenting as to if somebody comes and says, I have innovated something and this would solve this problem, then the regulatory sandbox actually evaluates it and lets that happen. Now in 2020 that was formed. 2021 Nucleus Software actually came up with something called PaySafe.
Now in PaySay, you can make digital transactions in rural areas without or low or no internet. That was a big thing, it was actually successful with the sandbox of RBI. And they actually went to the hinterlands. They went to Fatehabad in Haryana, and they actually went for so around 22,000 women from self-help groups actually could use that particular machine to get their payments done. So from micro savings account to micro lending, all kinds of things could be done there, and in a month's time, about lending to the tune of 155 crores actually happened. So that was again a big breakthrough from an Indian company. Similarly, recently on 5th of this month, RBI gave permission to HDFC Bank to actually do a similar exercise with their partner, which is a Swedish company called Crunch Fish. It's a Swedish firm. Again, with the same objective of how to use, how to do rural digital transactions without internet. And even, that is now under progress. So what I'm trying to underline is that any such thing which is an impediment in the growth of digital adoption because of, infrastructure is also being addressed. And it's, in next 5 years, again, we'll be taking a giant leap there. So I feel that, we are on the right path, for, increased adoption. Yes, certain things highlighted are a problem. Fraud is a big problem, which actually, if somebody tries it and something happens with that person, he doesn't want to do it again. So the overall framework, the overall infrastructure, and the technology infrastructure of certain banks, like cooperative banks, etc., also are an impediment to which somebody has to, people will have to address. A lot of things are happening with open banking, and which is also encouraging adoption and encouraging banks to try fintech companies and give them APIs. So I think there's a huge scope as we go forward, and I'm quite bullish about it. Thank you.
Yeah, let me give a slightly different perspective. I do agree with that the billion transactions undoubtedly will come from the next billion, which is from the rural markets. So before getting into how do we increase these transactions, one of the aspects that we have to look into is that a lot of these customers, unlike you and me, don't get their income through bank account. I think that was solved largely with DBTs coming into bank account. And especially, I can tell you with a lot of conviction in our case, where we have more than 2 crore customers getting their DBT through bank account. That helped in terms of digital payments, because 50% of the usage, if I track, that actually goes in some sort of small value digital payment. And one of the advantages that we've also observed is that because of the proximity of our branches or outlets, that also gives some sort of trust for these customers, so that they retain this money instead of withdrawing that entire money in cash. General tendency you would have seen, especially from DBT beneficiaries, that they withdraw it in cash. But whereas they are using this for digital payments, that's a welcome move. And the other trigger that I would sense would really work in increasing the digital payments is probably for this set of customers, creditization, which is, you provide them with some sort of a digital credit that can, probably trigger more digital transactions. Maybe it can be a small value credit, which can really help digital transactions. I think that's a real trigger. With the kind of development that are happening, especially in the account aggregator framework, OKN, I think if the micro credit or nano credit, so to say, where even a credit of as low as 1,000 rupees credit, if it can be given for powering some of these digital transactions, that can also help a long way in promoting these transactions.
Right. No, absolutely. And I think all of us have so many thoughts on that. So I'm going to come back to that, and I'm going to ask you a lot of questions on that actually, Venkat. But just before I get there and I get back to that, I want to talk a little bit about B2B payments. Honestly, we have always been big believers that of course there's been a massive leapfrog with UPI. And there's a lot of new retail payment use cases and flows and target segments that are coming into the economy that you're seeing, right? But we still think that commercial payments, B2B payments, is where the next leapfrog is actually going to come from. We work with so many banks, including private and PSU banks. A lot of them, of course, India's SME base and corporate base is actually concentrated with these banks, right? Because there's a very high debt exposure that banks have to these corporates. But what we've heard constantly and consistently from bankers is that because the last mile of these products that SMEs and corporate customers need, things like vendor payments, things to solve their day-to-day, right? Things like statutory payments, even payroll, right? And then those payments, of course, are, as Venkat was saying, right, layered with credit and supply chain financing and invoice discounting. A lot of bankers have come to us and said that, this is not our core business. And as much as we'd like to do the last mile, for our customers, we're not able to do it without partnering with fintechs or partnering with companies that understand these flows and can go to these customers, right? So, both Priyam and Vineet, I think you can weigh in on this. I'd love to hear from you on how at EU, you have been partnering with fintechs. What kind of new B2B flows have you been seeing? And of course, Vineet, you work with a lot of banks. Would love to understand how you're seeing, what the last 2 years has been like for you, right, in terms of transition.
So, Priyanka, yes, we work on the B2B side. That is our only offering, which is commercially live. We are a escrow banking solution provider. And though our go-to-market is top-down, we have gone the enterprise route first. But ultimately, our product is mainly going to be used by, you can say, millions of SMBs and MSMEs. But we work in a very complex kind of a product where even concept selling has to. I was talking to a unicorn founder, and he said, okay, he'll invest. And he said, but what is an escrow? So, so a concept selling is required. So you got to tame the beast that you are grappling with, unfortunately. So, but yes, huge potential. It took me 12 months to find my first banking partner. Okay, so for 18 months, this business remained at an idea stage because no bank was willing to work, and everybody said, "Hoga nahi, band ho jayega," whatever. That nobody will agree. And now we are working with 9 banks. Another 10, we are at, you can say, agreement or various level of closure stages. We're talking to 6 PSU banks. Everybody wants to work with us because we are enterprise and top down. The flow of money in terms of values is very high. Escrow is a zero interest account product. All the interest accrues to the bank. So banks are extremely interested, especially you can say the private banks, especially the slightly smaller private banks. Small finance banks, I don't think any one of them even have a escrow banking product, escrow account product. We are talking to 3-4 of them, including AU, to white label our solution, and so that they can launch for their enterprise customers an escrow account product. So I'll give you some numbers. Like we have currently 150 enterprise customers. We process around 100,000, 1 lakh transactions a day. We project around 30,000 enterprise customers by 2030 over the next 7-8 years, and maybe a few million SMB and MSME. Just on the enterprise, MSME, SMB side, if you extrapolate the numbers, Casla will be processing millions of transactions daily. Plus, we have ambitions on the retail side as well. Again, just to throw an interesting number. Only through OLX in India, at a very, very pessimistic projection level, around 1 crore transactions happen every month. And they are just a listing site. They don't have a checkout kind of a product. So you combine OLX plus Sulekha plus Just Dial plus Till India plus whatever, Quicker and Instagram and WhatsApp and Facebook Marketplace and so on. I don't know what kind of a market size are we talking about. 10 crore a month, 50 crore a month, 100 crore a month. So I think we are scratching at the surface. I think India is a great opportunity. What has been built right now by certain operators and stakeholders is just the beginning. And the real game begins now. It is hard times because, as I said before, that the regulatory framework it is at a very infancy stage. I think somebody said that you talk to 10 lending fintechs and they will give you 10 definitions of digital lending. So you talk to 10 banks and they will give you 10 definitions of what is KYC. तो हम तो अभी तक KYC भी फिगर आउट नहीं कर पाए. Okay, so इसमें time लगेगा. So you have to be patient operators. Your investors have to be patient as well. And whoever is in a hurry, I think they will get burned sooner or later. That's my opinion in that sense.
So well, yes, B2B payments, I think are the next growth areas. If I talk about globally, globally, that's a $1,000 billion market, which a lot of reports say that will be reaching $2,500 billion in the next 7 to 8 years. And APAC would be contributing big time to that. So that's a CAGR of around 10%. APAC is saying would be 12%. India would be the largest player in APAC in B2B payments as we go forward. So if I talk about the current situation, B2C payments dominate. But B2B payments, again, in the next 2-3 years, I think it would be dominating and it would be bigger than B2C payments in India. Now, which is the most important part? So there are too many things. There's payroll, there's marketing, there is cloud, there is, supply chain finance, working capital finance. But the biggest growth area for me would be the working capital finance or the supply chain finance, especially the purchase finance. A lot of fintech players are in that space, and there's a lot of interest of banks in that space. If you ask me, so a lot of banks have already opened their APIs and are integrating with top-notch players of supply chain finance. As we talk, around 15 to 20% of overall supply chain finance market is actually governed by the fintech players, and they are very efficient. The onboarding experience, if you talk about KYC and the onboarding experience, and the marketplace experience that some of the fintechs offer are unparalleled. And a lot of banks are tying up. For example, recently, not recently, but about less than a year back, Axis Bank actually acquired 5% stake in Credible. Federal Bank similarly acquired a stake in another supply chain finance company. If I talk about other B2B engagements that banks are doing, there have been multiple tie-ups. Open is a very famous, again, fintech company which is tie-up with many banks now. So what we are doing, we are opening ourselves to, including AU, we are opening ourselves to such fintech players and integrating, because that's a win-win situation. We give the best to the customer, and the fintechs also get the access of the banks. So I think another thing which is a big thing right now is the BNPL thing. Now I think the B2B BNPL would be another big area in the times to come, where, as I said, purchase finance would be a big area where MSMEs struggle. Why this would be the largest growth area for me for B2B payments is because 40% of MSMEs still do not have access to credit. Now, or the commercial cards. So right now in commercial cards, cards industry as such, only 25% payments are happening in B2B space. 75% is still not in B2B. That percentage, I think, would increase in the near future to 50% in commercial cards. And if I talk about overall scheme of things, these fintech players, etc., and the access of credit, as I talked about, MSME, I think this would be the fastest growth area and innovation area for fintechs. So if I talk about how banks have been behaving in the last several years, so the initial set of banks which were very active on fintech space was Yes Bank and RBL Bank, and now I would say that even SBI is interested, and even they have not just they're interested, they have also invested, and they have even bought some fintech players.
Right.
So that's a big leap if I talk about taking a big leap in B2B payments.
No, absolutely. I think, like I said, commercial cards, yeah.
Just like to add, one more area, Priyanka, will be the EXIM, the export-import market. So that is, you can say, in a way, a black box right now. Okay. So we're just doing a beta with 2 paid customers and getting leads on a daily basis. And everybody wants pre or post shipment credit as well. So that's a totally new. Last quarter, I think India crossed 800 million in exports and imports. So sky is the limit for India. Look, As of now, in terms of growth and opportunity, we are the biggest market in the world. So you combine Southeast Asia, Africa, the entire Middle East, Latin America, maybe we will still be the biggest or at par with them. So that's the opportunity here.
No, absolutely. I completely agree. And I think, with commercial payments, like you were just saying, commercial card acceptance has been so low traditionally. And I think things like UPI, I'm waiting for the UPI moment for commercial payments, right? Where you can program acceptance and you can increase acceptance significantly. And I think it's a no-brainer because most of the raw material suppliers that you're working with, your vendors, they all have UPI accounts, right? So why not be able to pay them as easily as you're paying for your own personal payments, right? So I think there's a lot to be done there. And honestly, that brings me to my next question, and it's a very interesting trend that we are seeing. We are betting everything on this trend actually at Falcon. And that trend is basically one of embedded finance and BaaS, right? What we're seeing is, and even whether it's with commercial payments or with rural retail payments, we're seeing that often what's happening is that companies who are very close to these customers, right? You see, for retail payments, of course, you see agri-tech players, right? Who are working with farmers already, who are working with a lot of people on the ground. With commercial payments, you're seeing neobanks, so you're seeing vertical SaaS players who are already helping with receivables, with payables, and you're seeing them constantly layer financial products on top, right? And honestly, this trend has exploded in the US. In India, still, when you talk about BaaS and you talk about embedded finance, few people fully understand the power or the potential of it, right? In the US, it has been exploding to the extent that Matt Harris from Bain, for example, calls fintech the fourth platform. He says after internet, mobile and cloud, fintech is going to become so common that essentially you don't even need to call it fintech anymore. A16Z, of course, has been constantly talking about the fact that every company is becoming a fintech company, right? So, for instance, I was telling you that at Falcon we have, folks from 25 different industries. We have people from gaming tech, we have people from agri-tech, like I said, right, ed-tech. Everyone is coming and saying that, listen, we already have this captive distribution of customers, and we're already talking to them every day. We have some of the largest M5 players, I was just talking to you about it just before this, right? Who are coming and saying that, listen, we already have $1 billion in AUM, but how do I, take my relationship with that customer beyond just dispersing a micro loan into their account? How do I talk to them every day? How do I build stickiness? How do I educate them about different services, about insurance, about other forms of loan, about repayments, right? And that's what you were talking about. So I'd love to hear from you, and I know, Venkat, I'm looking at you because we have been talking so much about, India Post's assisted commerce model, assisted banking model. And I know that you have big plans, in terms of taking your post offices and using them really as a power to, go to the next sort of 100 million customers, right? So I'd love to hear from you in terms of how you've also seen embedded finance sort of, help you with that leap. And same with you, after this, I would love to hear from you, Rajneesh.
Yeah, undoubtedly for this rural customers, as I said, credit can be a big trigger. See, there are two ways of looking at it. One is that you need to also come up with some sort of a structured products. We've also been hearing about concepts like save now, buy later. Okay, I think that's also another way of flipping the productization, where if you can give a rural consumer, hey, look, you want to buy something, some goal-based saving, okay, you save with us, and whatever that you save, at the end of the tenure, you'll get a discount. So that becomes a return on his investment. So if you look at the overall return from consumer perspective, one is that he's getting a discount, plus he's also getting certain interest on the savings. So that can, probably, convert into more and more digital payments. That apart, like how today we are looking at, BNPL as a facility, even for rural consumers for various consumption-based needs, be it, local purchase, or be it, certain bill payments, or even the entertainment, because today entertainment is like OTT is reaching out very fast even to rural areas. So even payment towards such services also would probably need credit.
I think this all needs some sort of predefined data analysis. As long as you're in a position to analyze or appraise this customer with the data that is available, be it the DBT benefits that the customer is getting, or be it the other sources of income this customer is getting. If you are able to give him a credit line, which can be a part consumption based, which can be part income generating based, like how it happens in case of microfinance, that can go a long way in enhancing the payment pay. Coming back to the user behavior and the difference between assisted and self-service, it's very easy for, especially for those set of customers who are below the age of 40 to get onto the internet. Thanks to the entertainment industry, like a lot of people are willing to consume the entertainment digitally, but at the same time, when it comes to payments, sometimes it becomes difficult and challenging, and that can be bridged to some sort of literacy campaigns. What we've seen is whenever we run these sort of village level literacy campaigns, it helps us in getting some of these consumers onto the self-service platform. While assisted will help. Initially, when we started, 80% of our transactions used to be on assisted, but with UPI-like services being there, it got reversed. Now 80% is digital, and it's only 20% assisted transactions. Having said that, as long as you're in a position to structure the products, I think some level of innovation in terms of product structuring can definitely help in bettering, and this would need a large-scale collaboration between the OEMs and between the lenders and obviously fintechs.
Yeah. So I think banking as a service, the way we see or I see is basically, I think unbundling the whole, it's basically unbundling and then rebundling, right? So just to put a context to it, you bring a product from a bank A, you bring a product from an NBFC, you bring a product from an insurance company, you bring a product from bank B, and then, you bundle it together and offer it to the customer. And then, as Venkat said, then it's the productization of that whole piece, right? That entire layer, where it should be as simple as if, anybody can provide it, right? So you go to a retailer, there's finance embedded in it, right? The entire full suite finance, right? And I think buy now, pay later, that entire trend and growth, of course, right now there are challenges around it, but I think that has shown that it is possible, and it is something that it is very well accepted, and it can lead to significant growth, and it has wide range benefits. Taking an example of a very a rural use case in embedded finance is a farmer when he is going to buy inputs or fertilizer from a Krishi Seva Kendra. There should be a buy now, pay later, which is use case controlled, and there's an insurance on top of it, etc. Right? So all of this is the answer, of course, as Venkat said, is in productizing it. But I think from an ecosystem perspective, from the new age banks' readiness to be able to do it, even from larger banks, public sector banks, I think their intent to do it, I think we are definitely in the right direction. Of course, I think the last mile will have to be, most likely, that role will have to be taken by fintechs. But I can clearly see it as a reality, very, very fast than we think. Yeah.
I'll just add to that. I think you've covered beautifully about all the points. But yes, I think personalized journeys of customers, so e-commerce is also increasing big time. So if we look at the personalized journeys of customers and offer products accordingly at the time of checkout. So while one is offering them lending, but if we also look at the journeys properly and bundle it with certain other financial services products, I think that can go a long way. That's all I wanted to add. But I think the most important point is in the rural landscape, what we was mentioning was if there is a complete bundling of all the products from various financial institutions and financial institutions actually taking a part in that, then that would solve a lot of problems. There is a lot of RBI push also on that last mile thing, right?
Yeah, just one point here, like Priyam mentioned about the consumer, I'll mention about the enterprise. So, I don't know, maybe Casper is not yet embedded banking player or bank as a service player as yet. We are still learning the game. And yeah, but I think where we are extreme early movers is in use cases. So we go industry by industry. Like any real estate company today, if they want to get into fractional real estate, maybe they can do so in a couple of days. They just need a front-face website. We'll give them the entire backend. Any company, I don't know, Tanishq runs a program called Golden Harvest. So now there are fintechs called Save Now, Buy Later. Okay. So we work with everybody, I think, in this space. So any corporate in India wants to do Save Now, Buy Later, come to Casper. We don't sell it, right? We are learning about these opportunities, etc., and seeing how it works, what is regulatory framework. Some are extremely esoteric ideas as well. We work with almost every revenue-based financing player, provide them the entire stack from aggregation of funds from retail investors to disbursement to cash flow collection to disbursement of yield. So this is a deep game, right? This is a long-term game. Nobody's done this kind of deep product development before. You got to become subject matter specialists at an industry and then within that industry at a use case level. So, so yeah, I think we are in the same direction, but I don't know, we should not be calling ourselves you can say, vast players like Falcon and M2P, etc. They are way ahead of us.
No, that's not true. Honestly, every use case you described to me actually sounded like that. And I think you're right, it is a very deep and long game. It's a patient game and there's a lot of solutioning that's required. But I think that's what makes this so interesting, right? And I think I am coming to my final and most controversial question of the evening, which I think everybody in this room has an opinion on, which is about monetization and revenue models. So I know I'm not going to look at the bankers. I'm just going to do like one final question, look at the fintechs right now, and ask you, I know that we're towards the end of our panel, so just a very quick answer maybe on, what you think about the debate around MDRs and revenue.
So, like I said, Priyanka, in the very beginning, that the regulated expectation is zero touch, zero time, zero cost, right? So we have a contrarian approach. We don't believe in zero touch, zero time, and zero cost. So we do those use cases and work with those corporates and enterprises who want with touch, who want with friction, because they want to know who the other party is. They want complete KYC, validation of their bank accounts, identification of individuals. Some corporates even go and ask us to find out about, you can say, legal cases and other stuff and so on, that way. In terms of, we believe in fast, not instant, so not zero time. Why? Because, and then, look, I came from a payments kind of a background, so when we launched Castler at MVP level, it was instant. But then customers called and said, we need itna fast nahi hona chahiye, because please give us an opportunity to mitigate for human error. Okay. And almost every day before I came, I approved a transaction while having tea outside. And the client called me and said, hey, we need that transaction was supposed to be deleted, rejected. And this is a $3 billion company, startup, but real valuation. And if they raise money, they will raise it 15-20 billion, I guess. So, but so we made a stack which has roadblocks, which gives you the scope for mitigating human error. Okay. The third is about we've avoided use cases where people want things for free. Okay. One client called me yesterday and said, hey, Vineet, you charge us 50,000 rupees for virtual accounts. And a $1 billion payment aggregator is charging me 10 rupees. You are charging 50,000 a year. वो 10 रुपए में दे रहे. So, but still they are our existing customers. They are one of our biggest customers. So, you got to, you can say, choose your battles. So we find use cases where customers want, you can say, hard problem solving. Okay, so that's why I say that more than a BaaS player or a payments player or whatever, I don't know. We are still discovering. Maybe 2025, when we talk, maybe I'll have an answer of what Castler is. As of now, maybe we are a transaction banking player. So we go deep into transaction banking and solve. We are a transaction banking CRM company. So that's why people value us, corporates value us. Yeah. So we make money. Our current ARPU, we are a small company, just 15 months old. Our ARPU per enterprise customer is 1 lakh per customer per year. And we are, you can say, when Naukri started, when I started building it in 2000, we are 4 years ahead of Naukri in terms of ARPU as far as 15 months is concerned.
That's fantastic. I think we all have a lot to learn from you as well. And I can't wait to talk to you after this, about your model. So I think, do we have time for any questions at all? No? Okay. Great, cool. So we are running late. So thank you so much. I think this was super interesting. Thank you so much for listening in.
पीछे आ जाए यार छोटो भाई कैमरे का खड़ा है यार
I would like Sagrika Shah, the co-founder at Connextdoor, to felicitate. Moving on to a final panel discussion for the day, data and APIs enabling seamless distribution of financial products. To a lot of extent, financial products have been democratized and distributed digitally, but a large segment of India still finds it difficult to access financial products. Problems typically range from access to awareness to not having sufficient literacy around financial products or an advisor to build trust or handhold. This panel would deliberate on how data and APIs can enlarge scale distribution of financial products at few clicks across India. I would now like to call upon our speakers for this last panel discussion. Mr. Mahendra Dohare, GM Digital Banking Transformation Division, Punjab National Bank. Mr. Rishi Mathur, Chief Digital and Strategy Officer, Canada HSBC Life Insurance. Mr. Shirish Joshi, Chief Business Officer at ONDC. And Mr. Vikrant Khurana, Operating Partner Fintech, Singularity Holding VCs. And our moderator for the session, Mr. Pramay Jain, Founder and CEO, Tata.
Hi, thank you everyone. हाँ उससे पहले thanks a lot everyone for staying with us for such a long time, and thanks a lot to all of you for braving this traffic and being out here. Thanks a lot for that. We possibly kind of look forward to the piece wherein you are in a position to give us some insights into how the data value chain coming out of this is going to be a big multiplier. And somebody said that data is not an oil, but he said that data is new soil. And that was a very interesting piece. Possibly Pramay will take forward from there. Thank you, Pramay.
Thank you, Abhishant, and thank you everybody for showing such a patience. I know we are probably 45 minutes behind schedule, and food and drinks are outside just waiting for us. But and thank you everyone for taking out time and joining. So the topic as it is seamless distribution of the products, right? So for any business distribution, which is in a distribution business, it's very critical that customers are delivered the product right, the experience is seamless, and there is a lot of focus on personalization, customization as well. So with that, let's deep dive with the panelists. We have a very diverse panel. We have Rishi from insurance background. We have Mahendra from banking and that with PNB. We have Shirish from ONDC, which is really the buzzword right now everywhere. And we have somebody from VC as well, Vikrant, right? So he's been funding so many startups, or probably going to. So let's start with Mahendra, right? So the question is that, in today, API first is not just a strategy word or something, but it's a crucial need as well for any business. And somebody like PNB Banking, who has been a traditional bank, how are they coping up with the new players coming in and new banking ecosystems that are getting developed? So how are you going to coping it up?
Thanks, Pramit. In the last panel discussion, the last question which evinces my interest is monetization of data. So in fact, this monetization of data is one of the key for all of us, so that we are in this ecosystem, fintech, startup, banks, or insurance companies, FSI sector. This is the challenge for us. But when we talk about monetization of data, this monetization of data, what we are doing, for example, particularly with respect to banks, we are going solely depend on the API. The kind of business now we are driving digitally, it's through the API, and this data is being monetized. But when we talk about this monetization of data, it comes with a lot of challenges from the regulatory point of view, maybe data storage, customer security, security of customer data, customer consent. Through the APIs, this API stack, all of us know, the kind of ecosystem has been created over a period of years through India's stack, paperless, presence-less, cashless. We are monetizing the data, we are making the business out of it, and the API is helping us a lot. Particularly in the context of digital journeys, where we, the bank, is rolling out asset and liability products. Nowadays, my customer need not to go to the branches. We are giving them, extending them personal loans. We are giving them credit cards. We are giving different kind of various services. We are opening accounts digitally. Customer need not at all go to the branches. 75% of my transactions are happening digitally. So you can understand all of this is happening through the power of API. We are working very closely with the fintechs. And out of this business, these fintechs and banks collaboration is helping us to generate the business, and API is very important for us. Without API, I don't think we would be able to work or deliver to our customers. Yes, this API is a challenge because there are issues with respect to security of the customer data, there are network related issues, but definitely over the period of time, not only we are evolving this API ecosystem, but at the same time, the new ways of doing the business is coming up with us. And just like insurance, like in the pandemic, we were like a lot of new companies have come up under health tech, edu tech, or a lot of fintechs have come up taking the advantages. And during the process, we have also learned as a PSU bank. Now we are going for the API gateways, API hub. So you can see the future of this API gateways, API hub, or API driven business. Thank you.
Great. Thank you, Mahendra. Next question from insurance, right? So, while there is an entire insurtech industry that is, doing innovation work, but from your perspective, what are the critical use cases that you see immediately at your organization, or similar organizations that are being solved by data and through the API stacks that are on offer?
Yeah. So I think in insurance, as you rightly pointed out, it's evolving very, very aggressively in terms of API stacks and all have become the new reality. And what's happening in insurance is that the pandemic has essentially forced insurance distribution to become much more digitized, which means that you have to rely on information that is available to you in the form of a tab or in the form of something which could be device agnostic, but is available to the seller. So the conventional process has got completely upended during during the pandemic. But this is something which is there to stay simply because of the fact that the insurance value chain itself has many opportunities where you can collaborate with external providers and you can actually all the enabling parts for distribution requires some information about the customer or pre-information about the customer. And that's where we are realizing that in many cases fintechs or specialized providers through APIs are able to connect to us and be able to provide us that information, which is otherwise conventionally a very long drawn process in the insurance acquisition chain. So that is where the power of having the API, having the data connectivity, having partnerships with insurtechs who can fintechs can actually bring us insight and information about customers and about doing the same process in a more efficient, more streamlined manner. These are the two most important use cases that I see. Of course, there is another third conventional area which everybody does say, which is also there, which is essentially on risk and fraud management, where again we leverage a lot of data, a lot of information across not just within the insurance domain but outside the insurance domain to assess risk and to actually capture fraud, which is a very important use case for the insurance industry. But I'm saying that distribution, enablement of distribution through better underwriting and customer information, and conventionally fraud and risk management. These are the three main pillars in which we are using.
Great, I think, and these are fundamental as well, right, to start with. My next question to Shirish is you, that, we have heard banking and insurance folks. How does it impact them? How can they leverage the framework that's getting, created through ONDC?
So, for those who may not know about ONDC, very simple terms, ONDC is now a capability that is being created to allow any buyer to connect with any seller. This is independent of product or service category, and through a single buying interface, you can buy pretty much any product or service. That's kind of the general idea. Now, when you have that as a background, then it allows even banking and financial products to be sold. And so now look at all the various providers of these products. So there is insurance products, banking products, post products. All of them, if it can be productized, if it can be cataloged, then it can be sold on ONDC. Now, every product category comes with its own set of requirements on what are the specifications for a catalog, what must you declare for the buyer to be able to judge. And depending on the category, certainly finance is a regulated domain. There are also regulations that are the others that may have been published that also need to be complied with. So with every category that is onboarded onto ONDC, what we do is we examine the business flows. We look at what is required to fulfill the regulatory requirement and what is required to fulfill the transaction requirement. We confirm that the protocol is able to transmit that and therefore a transaction can take place. And so ONDC setup basically enable any service to be sold, and it can partner with any other services that allow these components. So any service that builds catalogs of financial products, let's say, or any service that builds modules that allow finance-specific information to be transmitted between buyer and the seller, all those can then become components and participate.
Great. One follow-up question on this. So, typically like an e-commerce where there's a catalog within a catalog. Let's say I want to buy an iPhone. There's a catalog within that, hey, these are the 10 options that you can finance it, right? So, will still be there an impact in terms of how the purchase will happen or how this entire journey will happen?
Yes. So what I first described was when the financial product was the item being sold. Now what you're saying is some other item is being purchased, and as part of that purchase, there is a financial product to be sold to enable that transaction.
Absolutely.
Right? That is also feasible. Now that will be embedded on the seller application that is onboarded. Those 10 iPhone sellers who onboarded the catalog, they would have also embedded a payment process or a payment tool.
Financing solutions.
Yeah. And so then that's how it will get enabled. Likewise, it could be on the buyer side. So a high value item that needs to be sold on EMI, and then that particular product can be embedded at the cart stage for buyer application. So as a network, ONDC is like a protocol for bringing together Lego bricks. So those familiar with Lego, all Lego bricks have those circular things, right, that connect bricks together. And so any brick that has those circular things can connect with any other. So ONDC is like that. ONDC protocol allows any combination of businesses and processes to come together, connect up, and create a full service.
Super. Vikrant, next question is to you. That we have heard fintech, insurance, ONDC framework. Now, how does a VC look at this ecosystem? How do they evaluate fintechs? With these three ideas in mind, that how can they enable these businesses, enable these platforms, or use their existing framework to actually develop a new business or build something, create innovation?
See, fintechs is a great theme, right? They've given great multipliers. Data infrastructure is a key theme. Cross-border transactions in fintech is a very high EBITDA margin business. So yeah, fintech continues to be one of the core investment areas, whether India or globally. The end of the day, what happens is that whether it's data, whether it's a fintech, as our previous panelist was also mentioning, it's about the use case, right? And the bottom line is that use case or whatever you're building needs to generate a revenue and over a period of time running up a profitable venture. It can't be just thin air. So yeah, I mean, with said that, any company which has a vision that they are building a fintech which is going to solve a huge TAM, right? We're talking about data here. I think this country certainly has the potential to have a alternate credit bureau, because we have the highest new to credit or NBUs, the next billion users population in the world, right? But still, that union or that bureau is not here yet. So it boils down to that the TAM is great, the regulator is quite supportive, fintech ecosystem is amazing. So yeah, investments will continue to happen.
Great. My next question is back to you. Let's come back to banking again. So you mentioned that there's a great adoption at your side in terms of how these new API stacks that are helping you improve transaction. You mentioned 75% of the transactions happening digitally fully. So in terms of your readiness, what is the typical process any new player has to follow and to be able to partner with you? Because typically traditional banks are seen that they're very hard to crack. How do we partner quickly? How do we move further? Move the ball rolling quickly?
See, I'll tell you. Basically, particularly for the banks, it's very difficult to expose their own systems to any company or the fintech or startup. But in the new age technology, what we are doing, we have developed a middleware, and then we are integrating those APIs with the middleware without exposing our internal important systems. So that technology now, which has been used by the banks, is very, very simplified. The API architecture is also very, very simplified. And when we do it, the major motto is, what is our business strategy? And when we do that, as you mentioned, how we onboard the fintechs. We invite the fintechs for the different domains. We take the presentation from them and we onboard them for our various business domains, which can be even data analytics, which can be digital journeys, which could be asset and liability products, which could be collections also. So under the different segments, now the banks are roping in the fintech services.
Great. Next question, Rishi, to you on the similar lines, right? So India, we know India is a very underpenetrated in terms of insurance, and there are a lot of innovations required in terms of not just distribution, but how to create the right product and rightly underwrite the customer and actually create the right product for them. So the question is around how do you look at as a partner? How do you evaluate a partner? What is the organizational structure internally that you have to actually support these partners to be able to create that innovation, develop that, and actually transform and see the real results?
I think great question, because conventionally insurance companies, and I think banks as well, we have not had been that amenable to fintech company. But I think, as sir rightly pointed out, what has happened over the past few years is most systems of record, which are internal, while they have stayed internal, people have found ways to create a middle layer, or to create a, and then on top of it, an API manager, or something in between, which actually helps to bring out some of the business rules that run some critical processes and bring them out in a way that they can engage with any partner or any provider. So that is where I think in insurance the core opportunity lies, on how to engage with, say, a fintech provider. If the business rules that go into how do you process your new business, or how do you underwrite a policy, for example, if they can be kind of packaged and then you can bring in information which is coming externally, and then use them to kind of give a decision which is almost instantaneous, or is almost at the front end, which is where the power of data evaluation would be. So that is how we have to move forward, and we have taken steps in that front to kind of make sure that the organization structure, the engagement with fintechs is in that sense. But there are certain preconditions which are always there. Info security is very important. So that is something which is critical. So that has to be addressed when we are onboarding any partner. A proof of concept, a clear use case is important. So therefore, it's very important for fintechs to have some degree of understanding of what will kind of work, and what is a realistic implementation versus something which may be just a very broad idea. And then the ability to take a smaller set of information, work on it, show that it is delivering, and then the scale up can be very fast. So I think that's the approach that we take. Well, obviously we ask for representation, we ask for to understand what exactly is the proposition, what use cases are clarity and can be done. But then we look for a place where we can give a controlled set of information, or a controlled data set, and ask for it, that can you make it work in a real-time situation. If that works, then we are happy to kind of scale up and take it.
That's great learning for us. And I think probably we can use some of the tips when we approach you next. So Sirish, we, over a period of time, we have seen a lot of stacks coming up. There was a India stack, and following that there was account aggregator framework. We had OKM, we had a few others that came up, UPI network. Now within ONDC, how do you see the collaboration with those stacks with ONDC? Because is it a completely different new world that you're talking about, or how do we integrate all of them?
No, actually, it's a interconnected world of open networks, and given that these are open networks, now they allow connections that, even if possible earlier, have been made more efficient. So let's just take, you mentioned credit enablement network, and take ONDC, which is fundamentally about transactions. So let's take a small retailer who runs a shop, doing very well, wants to upgrade to becoming a supermarket, wants more real estate, better lights, some more aisles, couple of cash register, more people, basically wants to invest to be able to do it. He can port his transaction history, give permission to the seller application on which he's registered, to port his transaction history to the OKM network. So now creditors there can look at his growth of customer base, growth of basket size, maybe even his location is in an economically prosperous zone, and machine to machine and approval can take place. So you don't need the entire ONDC network to participate. You're just getting a seller and the application on which he's registered, which has his transaction history, because that's not being maintained by the network, being connected to some part of OKM network, and now a loan is getting done. So the whole world of APIs and open networks is actually enabling us to now not require full solutions to necessarily get created, but take components, connect them, and create that combination. And that's, we're blessed to be in that magical time when all of this is happening.
And probably very fast as well. Very fast. So, so next question to Vikrant, right? So, there are so many things happening, and moving, a lot of moving pieces as well, very fast as well. do you still see anything missing, or what do you think where the opportunity lies?
A lot is missing, and yeah, we are progressing, but are we there yet? No, we're nowhere close. Why do I say that? I think the opportunity which is in front of us, which fortunately the country gives us, I think it's humongous. We are in a data summit. Unless I recall, there haven't been a data organization which is into late stages, right? When I say that late stages, it's north of $5 to $10 billion, which is pure play data organization who has played that kind of a vital role. Do we have a potential? Much more than that. Similarly, I think the value that B2B infra has in the country is tremendous. It's yet to be explored at scale. So, data encryption itself is a big theme. And, so yeah, we are there, but in our opinion, we do see a lot of early stages, but growth and late stages is yet to happen at scale, and the potential lies.
Great. So next question with Rishi. The question is that, we heard, previous conversations that there are a lot of regulatory changes happening, especially on the lending side of the business, right? Probably there are a lot of definitions on digital lenders, etc. So from being an insurance player, right? So do you see any similar things in store for insurance or tech industry as well? And if yes, then how do you evaluate and how do you move forward?
Yeah, I think over the last, say about last 6 months, particularly I think the insured tech universe and fintech universe that is supplying to insurance companies has seen a tremendous kind of explosion, or I would say, or at least the opportunity size has kind of increased simply because of the fact that the regulatory push has also come in. The insurance regulator has clearly recognized the role that insurtechs or insurance or providers to insurance companies who come from a fintech background can add value into the entire chain, and have recognized them as very recently, I think about 2 months ago, there was a massive summit which was done in Bangalore, which was sponsored by the regulator actually, and to get the entire fintech or all insurance providers on the same platform, understand where some use cases are already going, and make a big showcasing of the same, so that the industry can actually leapfrog some of the challenges which are currently facing. So there is a lot of push, which is coming in, particularly for some of the frameworks, the compatibility framework, on how to utilize that for the spread of insurance. And I think this is all stemming from the fact that there is a stronger push from the regulator to go last mile. We have to, increase the penetration of insurance within the masses. And in many of these, the capabilities that come on play from fintech providers, in order to be able to kind of digitize many of these processes, in order to be able to expand distribution, are going to be very critical. So I think the right level of support is available. A lot of enablement is available. It's now for the ecosystem to kind of come together and deliver against the expectations of the regulator.
Great. So Mahendra, how do you look at the current regulatory environment? While inclusion is a theme.
As you said, what is in store and what's going to happen, and Sanish talked about regulation. So if we see RBI Payment Vision 2025, there are two important parameters under that, which is one is innovation and second is institutionalization. The innovation talks about even IoT, BNPL and other kind of product and services which the regulator itself wants to promote. It also talks about, the vision document also talks about institutionalization, particularly payment and settlement
system, PSS Act, whether that needs to be revamped. It also talks about big tech and fintech also, whether how they need to be regulated so that discipline is there and the best comes out in the market. So when the regulator itself is kind of very serious to do the innovation, to bring out the best in the market, to push the players in the market for the innovations, for the institutionalizations, and promoting fintechs, definitely we have a lot in store for us, for all of us.
Shirish, one question for you. So, while ONDC framework does help a lot of retailers to expand their market and sell, and definitely there's a lot of talk about that it may impact the large e-commerce platforms. It may impact, but who wins? Who has the largest inventory or the real retailer?
That's there's so many variables in the question. Essentially, whoever provides a great product wins. Whoever provides great service wins. In an open network, everything gravitates towards performance rather than to enabling. So whenever you have closed entities, then the closed entities control what gets seen, what gets traction, and therefore other influences can come and play. Whereas in an open network, the only currency then becomes performance. So now, if you don't perform, obviously you don't get it. So it has nothing to do with big or small. It has to do with performance.
And by performance, you mean pricing or?
Pricing is only one dimension. So those who want the cheapest will go to the cheapest. Those who want a good experience will get the good experience. You can buy a 10 rupee coffee on the side of the street, and you get a 500 rupee coffee in a 5-star hotel. Depending on what experience you want at what point in time and what context you want it in. So it doesn't as if everything gravitates towards the lowest price.
Great. Any questions for audience? Anybody wants to ask anybody? Otherwise, we'll wind up. I know everybody has been waiting. Delayed discussion, but anyone? Great. So we'll wind up here. And thank you so much from all of you for taking out time to join us. Thank you.
With this, we wrap up our panel discussion sessions, which happened in a marathon manner. And a round of applause for all of you present here and viewers watching it on our live stream for patiently listening and asking questions too. It has been a wonderful day as envisaged of bringing the entire fintech ecosystem on a single platform at the launch of Delhi Fintech Meetup Chapter. The chapter, as highlighted by Pankaj, is a step in the direction towards catalyzing the fintech ecosystem in Delhi NCR, where organizations can come together, collaborate, co-innovate and forge the strong partnerships. Further, I would like to thank our partners for coming together and supporting our initiative, our presenting partner DMI Finance, our startup partners Finvu, Data Sutram, Falcon, Tartan, Castler and engagement partner WebEngage. Lastly, I would like to thank all of you for being a supportive audience and staying throughout the event, not only to the participants physically present here, but our viewers viewing it on the live stream too across different cities in India. We would be welcome to suggestions and feedback on how can we keep the ecosystem stitched together in coming times and enable win-win opportunities for everyone. Once again, thank you to all. Until next time.
vibrant.